no more. One man should have all that. Let's get lost tonight. You could be my black Kate Moss tonight. Play secretary on the boss tonight. And you don't give a fuck what they all say, right? Awesome, the Christian and Christian Dior. Damn, they don't make them like this anymore. I ask, cause I'm not sure. Do anybody make real shit anymore? No one man should have all that power. Don't act like I never told you. No one man should have all that power. How could you be so heartless? How could you be so heartless? No one man should have all that. I'm a sick, I like a quick. I'm a sick, I like a quick. I'm a sick, I like a quick. I'm a sick, like I had a dream I could buy my way to heaven. When I woke, I spent that on a necklace. I told God I'll be back in a second. Man, it's so hard not to act reckless. Boom, much is given, much is tested. Get arrested, guess until he get the message. I feel the pressure under more scrutiny, and what I do, act more stupidly. I need you right now.
Good traders, what is up and what's going on? And happy Money Thursday, ladies and gentlemen. How we all doing today over on YouTube? Hit me with a big old good morning. Where are you guys tuning in from? What you guys doing today? Happy to have you here. And then obviously everybody inside of chat should already be hitting me with that big old good morning. And happy Money Thursday, baby. How we doing today? Are you guys fired up? Are you guys excited? Are you guys motivated? Because you know what, team? I'm ready to go. I'm ready to rock and roll, and I am ready to crush this day. Mexoids, what's up, buddy? Kits King, Real Little Spaz. Ron, what's up? Ladies and gentlemen on TikTok, link in the bio. Alpha Day Trading on YouTube. We are now live. Yo, Corey, Angel, Texas, Cowboy. Woo! What's up? What's going on? Good morning. I'm ready to rock and roll as well. Angel the Messenger. Good morning. What's up? PXS. Happy to have you back. Steven, Denise, Danny, Brandon. What's up and what's going on? Happy Thursday, baby. It's going to be a great day in the market, team. It's going to be a wonderful day in the market. Cole, are you here? Mr. Cole, are you in chat, my man? I saw him up here about 8:20. Good morning. What's up, Cole? I have a question before we start our day, my man. Wade, what's up, Wade? How we all doing today? I like it. Real Little Spaz, of course. Ready to stay disciplined and look for the best opportunity. How'd you guys enjoy that lesson yesterday? Be real with me. How did you guys enjoy that non-trading related lesson about discipline? Did it change your mindset? Did it give you a different perspective on discipline in your day-to-day life and how that really impacts your trading? Like, how'd you guys like that lesson yesterday? It was great. I liked that. I liked it as well, guys. Even though I put the lesson together, I still liked doing the lesson. I'm like sitting here going through the lesson. I'm fucking taking shit from it. I'm learning from it. I'm like, man, it was great. I liked it. So I just like to get you guys' feedback as well. Yo, Doug, good morning, Bubba. What's up? Texas, Jake Lakey. What's up, Jake Lakey? I'm going to call you Jakey Lakey. I like it. Jakey Lakey. It rhymes. It looks good. All right, guys. So once again, good morning. Happy Thursday. It is the second day of December. And I tell you what, baby, we had a great first day. We had some big time profits in chat. I personally locked up a little over $900. Great way to start the month of December. Again, our theme for December is Discipline December. Everything is tailored around discipline, guys. I want you guys getting serious, strapped in, ready to rock and roll, and build up some great positive momentum and carry that into 2022 in the duration of your trading career as well. So get ready. We're taking this month, we take every month serious, but this month is even more serious. Really talking about discipline to get you guys, consistent and get you guys up to speed so you have that great positive momentum to roll out into 2022, baby. All right? I'm excited. I'm ready to go. I'm ready to rock and roll. So today, guys, in my opinion, when I jumped on the mic around 8:20 to kind of review what we have going on for the day, I think a lot of the focus is still in the broader market, right? Right now, our number one gainer, right, is the warrant on CFVI. But CFIV, the stock, right, is up 40%. Not bad. Has a lot of great potential. Let's go ahead and start with CFVI, all right? So CFVI announces that Rumble will go public via a SPAC deal. Value over $2.1 billion. That's very good news. That's a very good press release, and that's why we're seeing CFVI move on up. This is a lower float stock, right? It's 30 million in float, and it's trading high relative volume. 13.9 million shares on average, 28. This thing has a lot of volume, and this thing has a lot of great potential to the upside today, team. So CFVI, that's our catalyst. We have high relative volume. It's a lower float stock. This stock could absolutely rip. This stock could absolutely run, and this is the highest this stock has ever been. So right now, we're just trying to gauge our levels from pre-market, right? So $13 is going to be our level of support. It did pop up towards around 1546 here in pre-market. That was the high. So right now, it's safe to say that we can put our support level probably right around, that 13 to 1350 level. If we take this into a 1 minute chart, you're going to have a little bit of resistance right there at 14. That was the close. And then $15 being the pre-market high. Now, if we break over that pre-market high, you're going to $20. That's going to be your next big target on CFVI. It's going to be right at $20 here, all right? If you crack below that 1350 support, where does it have room to come down to? Honestly, I could see it coming down all the way to like 1174 here on CFVI. So right now, there's not a lot of daily history, a lot of data that we can pull from that daily chart to really gauge super strong levels of support and resistance and just like really good targets. So we just have to do this from pre-market. And right now, it's safe to say 13 to 1350 is great support. We have room to 14. Over 14, it's going to be 1546. And then we're looking for that break over the pre-market high for that leg up towards around $20. Now, if we fail to break 14 and 15, we start moving lower. We start cracking $13. We do have room to fade and fall all the way down towards around $11.74. Okay, so CFVI, definitely want to be keeping the stock on watch today. Moving on, we have OMER. So OMER announces an agreement to sell their franchise, a transaction value in excess of $1 billion. So we have a great catalyst. OMER is trading high relative volume as well. 5 million shares in pre-market, on average 1.25. It's a 60 million in float, so it's a medium-ish float stock. It could definitely move. It could definitely rip and run. And that catalyst is very, very strong. And not just the catalyst, not just the high relative volume, and not just this being a low float stock that can move. This daily chart looks really, really appealing as well. Check this big gap that needs filled. You have a lot of resistance right there at 974. Why did we hit 966 and immediately get rejected? That is strong resistance on the daily chart. Now, if we can break 974 and $10, look at that big window of opportunity. it has room to $12.34, right? Right into this first level of resistance, right at $12.34. Now, we start breaking over that $12.30, $12.50. We could see OMER all the way up towards around $13.32. So I like the news. I like the high relative volume, right? The float's low. It could definitely move. And I absolutely love this technical chart, guy. I love the chart. I love the technicals. I mean, this stock's showing a lot of potential to be able to make a big time move today. So right now, OMER is going to be the number one stock we watch out of the gate. CFVI is going to be the number two stock that we watch out of the gate. We are coming right back down into support. We have prior resistance, aka new support, right around this like 830-ish level. Really want to see if we can hold this level on up here on the daily chart and then get that next leg up into the 975, break 10, and we can really start to see OMER take on off. So OMER, 830-ish support at this point in time. Room back up towards around the highs at 966. On the daily chart, it is 975. And then $10 natural psychological resistance as well at $10. And then anything over 10, room to 1234. And then 1332 there on OMER. All right, so we got OMER. We're definitely watching that. CFVI, we're definitely watching that. And we got a couple back burner stocks. I'm going to call them back burners because I'm not in love with them. I don't like them. I think OMER has a lot of potential, and I even think CFVI has a lot of potential. I think DWAC and Fun are just these hype stocks that could be messy to trade. That's just my opinion, but we're definitely going to keep them on watch. Right now, Fun. We got Fun and DWAC moving up again. All right, so PHUN support's down at 350. Resistance is at 441. So at least we have a window of opportunity. 350 support. We know that we have some room up towards around 441, maybe even back up to that pre-market high of 488, and then you're going to have $5 natural resistance as well. So it's moving higher out of sympathy with DWAC. So we know last time DWAC started ripping and running, Fun, PHUN, was moving in sympathy to DWAC. So let's really focus on DWAC. Why is DWAC even moving up? Right? Why is DWAC even moving up? So, digital wallet acquisition. Traders view Fundware as a potential buy on DWAC, and there was news. Where is that news on DWAC? It was yesterday. Come on, DWAC, DWAC. Where is that news at? In talks for a $1 billion pipe deal with Trump Media and Technology Group, sources say, for DWAC. So that was the article that we saw yesterday on DWAC. And that's why we're seeing DWAC rip to the upside yesterday, right before the close, came out of a halt in post-market, ripped all the way to 59.39. And since then, it's been fading and falling. That's why we're seeing PHUN fade and fall as well. If you want to get involved with PHUN, you've got to be focused on DWAC. Right? If you see a really great long setup on Fun, but DWAC looks like crap and it looks like it's going to crack, fade, and fall, it's really going to hurt your PHUN trade because these are going to move in sympathy. Fun is going to move with DWAC. So you need to be focused on DWAC. If DWAC looks good and it looks like it has a great setup and it's going to rip to the upside, well, you can go long on PHUN. If DWAC looks really bad and it looks like a better short opportunity, you would not want to go long on PHUN regardless of the technicals. You would want to consider shorting PHUN. Okay, so PHUN and DWAC, these are some back burner trades, guys. I don't really have high hopes for these. I could be wrong, but I think that there's a lot of bag holders in this stock, and any chance they get to get back in the green or break even, I think you're going to see a lot of profit taking, and we're seeing some profit taking right now on DWAC, and we're seeing some profit taking on PHUN as well. Like I said, there's probably a lot of bag holders here, and the fact that we're seeing these stocks, move up, you're going to see some profit taking as traders try and get out of these positions, in my opinion. So, I like them. They have potential, but more of like the back burner, nothing I really want to be focused on right out of the gate. I think we have much better opportunity. Well, I did with OMER. We'll have to go back and look at that daily chart and see where our next level of support is. And I like CFVI, right? But in my opinion, where's my focus for the day team? Where's my focus? My focus is in the broader market. My focus is with the SPY today for more puts. I'm still bearish. I'm still leaning to the bearish side. Right now, I mean, we have room down to 447.25 on the SPY. Below 447.25, I see this having room down to 444. It's still a little too early to tell if I'm going to go calls or puts out of the gate. We could see a little bit of a green day. We could see a bounce back into this 50 SMA to see this possibly get rejected, and that's right around 452. So let's go ahead and add another level of resistance, and that 50 SMA is going to be a pretty key level that we could see this stock stay below. So let's go ahead and edit that. Let's change it to blue to match the 50 SMA, and this blue line we know is our 50 SMA. So as long as we're below, ideally, the 50 SMA, I like it for puts. I like it to the downside. I think we could easily see this crack 450, come on down to 447.25, come on down to 444. However, if we're in the clear and we start to see the markets move back up, there's not as much fear in the market, everything's under control, yada, yada, yada. We could easily see this pop back above that 50-day moving average, and if we regain it, we could see a short-term move to the upside. Right now, I still don't think we're in the clear. Right now, I still think we have more room to fall here on the SPY, here on the Qs, and some of these other stocks that we're seeing get hit hard as well. So right now, I'm still leaning to the bearish side. Longer term, right, like the next week or two, I'm still leaning more to the stock market fading and falling and moving lower. Today, I'm like 50-50 right now. We could see a big double bottom right at 450. I mean, this could be like one big double bottom. We could see it bounce strong today, but we could also see it crack and stay below 450, which would make for great puts. So right now, not really able to get an edge at this point in time. But as the day goes on and things develop and unfold, we will definitely be able to attack the opportunity on the SPY. In my opinion, this is where a lot of the focus still is. This is where a lot of the focus is. This is where a lot of the volume is. This is where the potential is going to be in the options world, especially with the SPY and the Qs. All right, so that's what I'm focused on today. I'm still looking at the VIX as well. The higher that the VIX moves up, the higher the premiums are going to be. All right, the higher that the premiums are going to be for options. I'll consider starting to sell some cash secured puts if we see the VIX continue to rip and run to the upside. I may consider collecting a nice premium by selling some cash secured puts on the SPY and at a price that I would like to buy the market at anyway. So that's something I'm getting prepared for as well, and that's why I'm watching the VIX. So how can you take advantage of the market if you don't trade options? Let's say you're like, Josh, I don't trade options, dude. I'm not confident yet. I'm not comfortable. So how do I short the SPY, right? How do I go long on the SPY? Like, what do I do, man? I do not know how to get involved. I'm not confident with options, right? Like, you guys are going to be buying puts. So if the market's dropping, you guys are making some money. How do I make money if the market drops? You can go look at an inverse ETF like UVXY, right? So as the market falls, inverse ETFs will go up. So if you're like, I'm not confident with options, I only go long, I don't short yet, this is where I'm at as a trader. I'm trying to perfect long in equities before I start doing shorts and before I start trading options, calls, and puts. Well, you could simply go look at an inverse ETF, right? And you can go long on it. So if the market dumps, if the SPY falls and the overall market is falling, the inverse ETFs will go up. You have UVXY, you have BXX, right? We have someone over on YouTube saying SH is an inverse ETF as well. Absolutely, SH. But here's the thing. Look at SH. It went from a low of $14 yesterday to $14.40, right? It went 40 cents. Okay, so keep that in perspective. This moved 40 cents. UVXY yesterday moved $4. $4. So the market did what the market did. It fell. UVXY moved almost $5 to the upside. Now you go look at SH, it moved 40 cents. Which one do you want to buy? Which one do you want to get involved with? They're right around the same price. There's not a big difference. I would rather get involved with UVXY if it's going to move $3, $4, $5 to the upside versus something that's going to move 20, 30, 40 cents. That's why I like UVXY the most. UVXY is my favorite inverse ETF because it moves the most. And there's a lot of opportunity to the long side if the markets continue to fade and fall. So today I'm focused on the SPY, right? I really want to hone in on where we're going. I put more money into an options account. Like you guys know, I don't really trade options, but I've been missing all of the options opportunity that I've been calling for the past month. Big time opportunity, big time profits. I'm going to start, redabbling with options more on an occasional basis. So, I have that account. I'm good to go. And, again, I'm really looking at the SPY. I'm looking at the Qs. We had some great opportunity yesterday on the SPY. We had amazing opportunity there on Monday as well. On the SPY, I mean, it's safe to say that we've just been absolutely crushing our analysis on the SPY, and there's been some big-time profits being made. Not only the SPY, but we absolutely crushed Netflix this week to the downside. We crushed Snowflake yesterday before earnings. We actually took this short, covered before earnings, and earnings were great. So great thing you didn't hold a short position through earnings because it's actually gapping up massively right now on Snowflake. But overall, I feel like we've been crushing it lately. There's been some big-time consistent profits inside of Profits Chat. So again, with all of this options opportunity out there, I want to make sure that I'm prepared to take advantage of that opportunity. So we may be leaning more towards the option side of things, especially when we find these killer setups to where we can see some massive big time runs with these options contracts and see some big time profits. All right. So we're watching the SPY and the Qs. We put together some watch lists last night. Okay, we put together an Omicron watch list for the long side and for the short side. All right. So, what stocks do you want to be focused on if the market is dumping? All right. What stocks do you think would suffer the most? Right. If you do not want to just go short on the SPY and buy puts, what are some other stocks that you could buy puts on and short to the downside that could be affected by the COVID variant, right? You have the airlines, right? You have all of the airlines. So you have American Airline, right? Look at that, nasty. United Airlines, nasty. Delta Airlines, nasty, right? If you want to buy the ETF, it's Jets, right? You can go buy the ETF, Jets, okay? And have a basket. So, stocks that are going to perform bad if things get more serious with this COVID variant. Again, you have the airlines, you have the cruise lines, right? Carnival, Royal Caribbean, RCL, Norwegian, right? You have the cruise lines. We put together a really nice watch list yesterday for stocks that, would perform the worst if this new COVID thing gets a little out of hand. So let's go ahead and show you guys that watch list that we have. So we have all the airlines, all the cruise lines, we have Booking, we have Expedia, Airbnb, Uber, and Lyft. Stocks that could perform really, really badly if this gets a little out of hand. All right, so this is our Omicron short watch list. I will go ahead and post this up inside of chat. These are stocks that we worked on for about 30 minutes yesterday inside of chat. Everybody contributed, and we finalized this watch list and we put it together. So this that I just posted inside of chat are going to be stocks that are going to really get hit hard, that could perform really, really bad, that could be great opportunities to short to the downside if things continue to escalate and things continue to get messy with what we're seeing in the news. Now, these could also be stocks that when we find our bottom in the market, right, stocks that you could start dollar cost averaging into because they're going to get beaten down the most, right? If you like these airlines, you like the cruise lines, and you want to invest in these, it could also be a great opportunity to dollar cost average in to these very, very cheap stocks that can definitely and easily recover in the future for like long-term investments. So not only playing them to the downside, but also identifying when we see that consolidation, that bottom starting to set in, and dollar cost averaging into some of these because they'll be dirt cheap and you could definitely ride them back to the upside. All right, so these are going to be stocks that could perform the worst if things continue to escalate. All right, we do have a long watch list as well. So let me go ahead and load that watch list. These are going to be stocks that could perform well, right? Stocks that could perform well during this, right? Or stay-at-home stocks, right? So you got like Peloton could do well. Peloton's up almost $2. Zoom could do well. Walmart would definitely do well. People still have to go get groceries and the toilet paper and all that good stuff, their hand sanitizers, right? So Walmart. Clorox could do well also. Netflix, Home Depot, and Lowe's. If there's another lockdown, people are like, fuck this. Let me get some work done around the house. Or I'm working from home on Zoom. I got all my cleaning supplies from Clorox that I picked up from Walmart. I'm going to go exercise on my Peloton. At night, I'm going to watch some Netflix. But during the day, I'm going to do some renovations around the house. Right? So these are all stocks that could perform really, really well. These are considered stay-at-home stocks. Stocks that could perform well if we do see this escalate and if we see more lockdowns. Okay? You also have like Moderna, Pfizer, J&J. Right? A race to the new vaccine, races to the new Omicron variant vaccine. So you got to be looking at Moderna, Pfizer, J&J as well. DocuSign, CRM, right? These stocks performed well last time around in 2020. DocuSign and CRM. Someone said Costco. Absolutely, Costco as well. And then you have UPS and FedEx that did very, very well last time also, right? FedEx and UPS. So this is going to be a list of stocks that could perform very, very well if we continue to see things get messy in the market, okay? It's still a little too early to tell. It's still early, but what we were talking about last night is, this is taking me back to 2020. What we're kind of hearing and seeing and how things are unfolding is very, very similar to 2020. I didn't take it serious in 2020, and it's not that big of a deal. We got it under control. It's not being, really pushed in the mainstream media to really, dictate fear or anything like that yet. But it's definitely, in my opinion, leading up to that. Because again, this is like I'm reliving 2020 all over again in February. This is like the beginning of February in 2020. Then the end of February, we saw the market crash, right? So again, get prepared, guys. Stocks that you could buy puts on and make a lot of money to the downside. Stocks that could be great investments where you can dollar cost average into these cruise lines and airlines. Right? Stocks that could do well. Zoom, Netflix, Peloton, your stay-at-home stocks, right? And just understanding how to take advantage of this market when it's correcting or when it's crashing. And we did a lesson last week on that to get you guys prepared. I mean, what a coincidence. What a great time to do a lesson on how to get prepared during a market crash. We talked about, selling cash secured puts. We talked about inverse ETFs. We talked about options. We talked about every way that you can make money in the market as the market is falling, as the market is fading and selling on off. So we're prepared, guys. I mean, we have a great approach. We know exactly stocks that we could look at for the long side if the market gets messy. Stocks that we could short along with the indexes like the SPY and the Qs and these individual stocks like the cruise lines and the airlines that could get absolutely beaten down that we could short and take advantage and make money as the market's falling, right? So we're set up. We're good to go. We're prepared. So I'm watching the SPY today. I'm watching the Qs. Those are my primary focuses, right? I did not really go through individual stocks as we saw a big decline the last 2 days. And today, I think could be more of a investors and traders chill, right? So the last couple of days, you've had a lot of volatility to the downside. Today could be that just, I'm taking my breath. I'm taking a step back. I'm sitting on my hands. I'm going to chill out, right? And just and look to see where the market goes. Today could be a kind of stagnant sideways day, right? Before we see that next leg down or before we see that possible rebound. Again, it's too early to tell, right? I'm just kind of speculating that's what we could see, but I wouldn't be surprised if we kind of see this just kind of sit sideways today and a lot of these other stocks maybe not do so much, right? As traders just kind of sit back, relax, and catch their breath for a moment. Okay, but we will see. I'm primarily focused on the SPY and the Qs. If we see some great volatility in the SPYs and Qs, we will definitely go back to that short watch list for the airlines and the cruise lines. And that's where I think your focus should be today, guys. Right? Assuming the market falls, you're going to look to take puts and you look to short the airlines and the cruise lines. Okay, and then we could simply trade options on the SPY and the Qs as there's a lot of opportunity and a lot of money to be made there. So, what are we watching once again if you're just now tuning in for equities, right? Penny stocks. We're watching CFVI. Definitely one of the top stocks we should be watching. OMER. another top stock that we should be watching as well. We're watching PHUN and DWAC. Now, what's leading the board with volume today? So, CFVI, PHUN, FAMI regained NASDAQ requirements, if I'm not mistaken, but it's a large float stock. ABUS, Airbus, or Arbutus. Oh, okay, wrong one. Thought it was Airbus, ABUS. So, ABUS was a mover yesterday. This is the one that I think Cole called out for that big time move. Yeah, let's add ABUS to watch. Let's add ABUS on watch again. How are some of these prior day movers looking? PPSI? No. ATXI? No. PTPI? No. Nothing with LGVN. You know, we might see some activity with BFRI today. I'll keep BFRI on the back burner. We'll keep AHPI on the back burner as well. Nothing really with ISPC, MCLD, nothing. QLGN, nothing with Prague. That thing's done. And then AMC got hit hard over the last couple of days as well. So maybe we'll be watching AMC for another leg down, guys. If we see this pop up and get rejected here on AMC around $31, not only is that prior strong support on AMC, it's also the 200-day moving average. So if we see this open up, come up to this 31 and start to curl on over, I would look to short AMC to the downside today. So we'll definitely be watching AMC as well. So let's do this. Let's go AMC. We'll go DWAC here. And let's put PHUN off to the bottom. Yeah, we'll take PHUN and add it to the bottom of the watch list. And we'll add DWAC to the bottom of the watch list as well. Now, we had Snowflake. That was a good short yesterday. This stock, you know, actually ripping and running. Nice move there from 310 to 360, about $50 to the upside off earnings. So we could definitely be watching Snowflake as well today. But like I said, guys, the reason I'm not really looking at like individual stocks right out of the gate, like NVIDIA, like JPM, like the reason I'm not really putting my focus there is I try to simplify things with you guys, right? How do we simplify things? Really trying to understand where the opportunity is in the market. I don't want 50 stocks on watch. Let's really focus where the opportunity is right now, in my opinion. You know, the focus is on the SPY and the Qs. Really trying to see where investors and traders take the market today. Then let's go see what we have, maybe 10, 15, 20 minutes out of the gate for some individual stocks once we get a sense and an idea of what the market could look like today. So I'm not really honed in on individual stocks. I'm really focused out of the gate when it comes to options on the SPY and the Qs. APT. No news. APT's not even on the leaderboard with volume, and it's very, very choppy. APT, it's gapping. It's actually flat right now. Flat with no volume and no catalyst. So, yeah, I wouldn't say APT is the best candidate for the day. And again, I still want to just remember, guys, that, you know, if the markets fall, you're going to see these stocks fall as well, regardless of any kind of catalyst, okay? So just be mindful that if we see the overall market turn over and start falling, regardless of any kind of catalyst on a news that would support a long trade, you got to be very, very mindful of that, guys. You got to be very, very mindful of that. So we'll watch Boeing as well. Grab? Is this a new IPO that just IPO'd? Grab to trade on NASDAQ following successful business combination with Altmer. Okay, so Grab. Yeah, let's watch GRAB as well, Ed. We'll watch GRAB as well as a back burner play. Give me 1 second. I'm going to run to my my kitchen. All right, I'll run my kitchen. I'll be right back. So, ladies and gentlemen, let's have an amazing day. Let's have an awesome day. And let's do what? Whoever gets this right, I'm going to give you a big old kiss on the lips. What is our primary focus today, ladies and gentlemen? What's our primary focus? We got 1 minute to go, 40 seconds to go. Yes, that's number 2 on the Celsius. Don't judge me. What's our primary focus? No, Mexoids. No, Catherine. Yes, Real Little Spaz. Staying disciplined. I know our goal is to make money, but the goal is to come in, stay disciplined, apply what works, what we know what works consistently, identify the best opportunity, make the best of the best trades, and then we will see that money in that account. That's our focus, baby, to stay disciplined, to find the best opportunity, to make the best trades, and we will see those profits, team. Let's get fired up. We got 3, 2, 1. Let's go. Let's hit it hard, baby. The market's open. Let's have some fun. Let's make some good trades, and let's watch those profits just roll into these accounts, ladies and gentlemen. Ed, I will kiss you. I will kiss you, Ed. Mwah! There you go, Buttercup. I got you. All right, guys. So right now, again, just kind of sitting back, relaxing, especially with the market, the SPY, and the Qs. Like I said, I really want to put some focus on the SPY and the Qs today and have some fun with options with you guys, all right? So right now, let's adjust where that 50-day moving average is. That 50 days up towards around 453 on the SPY. That's off that pre-market high as well. Oh, we got to go to a 1 minute. 1 minute chart. Nothing yet with OMER. You got 816 support on OMER. 816 support. Below 816, $8 natural support. CFEI supports back down at 13.15. It got rejected off $14 resistance. ABUS has support at $4.80. So 480 support on ABUS has room back up to 540. Let's keep these on watch, guys. I like ABUS for a possible red to green move because where it opened, where support's at, we could see that curl. Breaking over the open, breaking over 5, breaking over the 9 EMA and the VWAP. This could be a really good red to green move that absolutely explodes if it starts breaking those 4 technical levels. So definitely want to be watching ABUS, team. Let's put ABUS off to the side. Like I said, it could be a really good potential red to green move above $4.80. Stops would be under 475. It's starting to get a little bit of action here. I might take a starter position. I took a starter position. Again, small position because I'm getting in right at resistance. But if it's a red to green move, this thing could absolutely explode. I only took 500 shares, guys. I only took 500 shares of ABUS because I don't like buying at resistance. But this was a great candidate for that red to green move. And there we go. That's what we want to see, baby. That's what we want to see. Keep going. Be a proper red to green move. Close over 5, close over the VWAP, close over the open, close over that 9 EMA. Let's see this thing continue to take on off. We do not want to see it back below 5 in a perfect world. I'm running a tight stop now on this trade. Red to green moves will explode. Red to green moves, rip and run. If this thing comes back down to my entry at 493, I'm cutting the trade because that's not what you want to see on a red to green move, right? I took the trade for a red to green move. If it doesn't do what a red to green move should do, there's no reason for me to hold the trade. I can get out, look for a different opportunity and a different setup. Right now, cost basis is 493, 500 shares. Looking to see if this can hold on up and continue to rip and run to the upside off of this red to green move, guys. Stop loss right now is break even at $4.93. Like I said, when you make an entry on a trade, if it's a pattern, say red to green move, if you do not see what you need to see for it to continue to be a red to green move, for example, you're allowed to cut your trade and walk away. Why stay in a trade that is no longer the reason why you got in a trade? Let's say you get in for a bull flag and it's no longer a bull flag. Why would you continue to hold the trade? It's not why you jumped in the first place, right? It's define why you got in. You got in for a bull flag. It's no longer a bull flag. Why stay in the trade, right? I'm willing to cut this at break even because a red to green move should not come back down below $5 in my opinion, or the open. The open was right at $4.95. If this comes below $4.95, it's not a red to green move. I will cut it. But right now, I am still holding ABUS, 500 shares, stop loss at break even. Not what you want to see, I'm out. Not what you want to see, I'm out. I lost $8. $8. That's how you get a trade. That's how you manage a trade. All right, got in, red to green move. Didn't do what I expected. It's no longer a red to green move. Now we sit back on our hands and wait for a different type of setup because it's no longer a red to green move. Penny stocks are not doing anything right now. I'm going to short AMC because AMC was something I was talking to you guys about this morning on AMC. That if we open and we pop up into that 200-day moving average, I am looking to short this around that 200-day moving average for the next leg down. So I would think about getting a short position on AMC around 31.23. I'm just looking for a simple rejection off of prior support, new resistance, as well as the 200-day moving average, and at least bring this back down maybe to low a day at 29. I would give it 50 cents of breathing room, maybe 75 cents at most. I'm looking for $2 to the downside on AMC. That's a great risk reward. And this is something that I had identified this morning in pre-market for a potential short if we saw it pop right out of the gate into the 200-day moving average and start to see it potentially get rejected. So I am watching AMC right now. Again, if we see like a little pop over 31, I mean, I may take a short for the pullback. Again, I'm not trading options. I am trading equities. Options, I would not be doing this. Equities, yes, because I can manage my trade properly with equities. If this was an options position, I would not be doing this on options. Because options, the theta, just the way they move, it's not a good approach for options in my opinion. So I'm shorting equities. So right now it's moving up over the last 3 minutes on decreased volume. I'm looking for a quick pop. Maybe a false breakout over 31. I want to see some profit taking. I mean, the stock did just move $2 to the upside without pulling back, guys. When the stock moves that much without pulling back, it usually pulls back. So right now, that's why I am shorting AMC, because I do expect to see a little bit of a pullback here, guys. I do. Let's see if we can start to see this get hit hard a little bit. Let's see if AMC can start cracking here back below 30, maybe back down to like $30 natural support right off that pre-market spiking high at 30. Again, the stock just ripped about $2.23 to the upside without pulling back. We know that stocks will pull back. We know that stocks will pull back when they go just straight up like that. So I'm looking for maybe a dollar pullback here. Maybe at a dollar pullback off my entry. Right now, I'm short at 31.05 is my cost basis. 31.05 is my cost basis here on AMC. Want to see if it can lose 30.75. If we can crack below 30.75, I think we see another 25-cent hit to the downside. I can start scaling in. I'm going to take half here, guys. I am going to go ahead and lock in a little bit here on AMC to the short side. We are seeing it get pulled down pretty quick and pretty hard. There we go. There we go. Let's take a little bit more. I'm going to ride 200. There we go. That's what I'm talking about. Let's go ahead and lock that up. Let's go ahead and lock up that short real quick. I'll take a quick 400 bucks. I'll go ahead and take a quick 400 bucks to start my day. Nice little short position on AMC. Airbus, or not Airbus, ABUS, red to green, didn't play out, cut it, didn't like it. I saw my short on AMC that I wanted off that 200-day moving average. I got it for a quick, 40, 50 cents to the downside. So I'll take a quick 428 to start this beautiful Thursday, baby. Woo! CFVI, OMER, nothing. ABUS, nothing right now. PHUN, look for PHUN for a red to green move, guys. PHUN is looking like it wants to get a little bit of a reversal here. A little bit of this red to green move. So let's see if this can break over 370 and then now stay above 370. We could see this trade, we could see PHUN trade higher today. For sure. Support right now is back down at 350 on PHUN. All right, so you got 346 current support. If we can break over the open, we could then turn the open into support, and that would be a good entry as long as we turn open resistance into new support. DWAC is holding that 20 EMA as well. 48.57 is trying to hold here on DWAC, so let's keep DWAC on watch. I know Catherine asked about Boeing, red to green move. It could be off a double bottom, yes. You could see a potential red to green move on Boeing, as you do have a nice little double bottom starting to form, but be mindful of the overall market as well. The SPY's having a pretty nice bounce right now. Let's put Boeing off to the side because I do like BA. Your stops would have to be under the low a day, Catherine. So if you're taking Boeing, just put stops underneath support. Support off the double bottom would be at low a day at 193. Put a stop under 193. Have a first target of the open at 196.81. I mean, you're still talking that's $4 to the upside. You have room to $200 on Boeing. You guys are saying PSFE's moving. PaySafe. Embrace payment technologies alongside cash acceptance. Okay. You do have a little bit of movement here, but nothing that excites me yet. So I'm not excited yet, but it's on watch. GRAB, nothing. Boeing was a good red to green move. Your stops are under 193. DWAC failing. PHUN not getting above 370. No entries. ABUS had to cut that very quick. OMER. Right now, OMER could find some support down towards around 765. Nothing's holding on up. Everything's fading and falling right out of the open. But here's what I do see, is I do see CFVI right at its trend line. So I do see CFVI still holding these higher lows, and it's right at its trend line. Give this about 2-3 more minutes. 2 to 3 more minutes on CFVI. If you see this bouncing off the trend line, and you see buyers here, that could be a good entry for a big U-shape back up to 14. Yeah, BFRI was one we set above 432. You could see it bounce. That will keep it on that back burner list, but I didn't expect it to pop right out of the gate like that. So BFRI is halted to the upside. PSFE. It's a slow mover, guys. It's slow. It's already gone from 342 to 352. I mean, it's slow grinding. The news isn't all that. It doesn't really have a lot of volume right now. I'm really not a fan of PSFE. I'm not. And if it starts moving and it's consistent, let's identify an opportunity. But right now, that lack of volume, I'm not a fan. I'm not a fan with GRAB right now either. You know, DWAC and PHUN, I'm not crazy about at this time. You know, OMER, like I said, could find support at 765. We are not holding the trend line on CFVI, so that was not validated. That support level on CFVI is 1174. We got to wait for this to come down to 1174 and see what happens. And they short AMC again. I'm just waiting. It could be a consolidation. It could be a flag. I'm waiting for something to really stand out to get a short. Right now, I'm not going to short this, but if I see another setup, I may short AMC again. Let's keep our focus on the SPY as well, team. Let's keep our focus on the SPY as well. You know, we did have that resistance at 454.50. So that we do still have resistance up at 454.50. If we come back down below this blue line, and this blue line is our 50-day moving average at 453. We come back down below this blue line, that 50-day moving average, we could see this back at low a day, which is 450. So, fingers crossed for Catherine. All right, fingers crossed for Catherine. You saw the SPY rip, Boeing popped. You're seeing the SPY pull back. You're seeing Boeing pull back a little bit. So if we can see the SPY just get another quick pop out of it, maybe we see Boeing get a quick pop. And Catherine, you could look to lock in profits, some profits, to take some money off the table up around the open at 196.50. 196.50. As long as you hold the low of day at 193, you're still looking good there on Boeing. Who are you talking to on TikTok? I'm talking to my team, ladies and gentlemen. I'm talking to the team, the OGs, the MVPs, the real deals. I'm talking to the team. BFRI is still halted. This will be a 10-minute halt on BFRI. This was halted at 9:36:17. You should have been live after a 10-minute halt at 9:37:17. I'm sorry, 9:46:17. My bad. Yeah, so you've been past a 10-minute halt on BFRI. This could be a 15, 20-minute halt. Okay, cool. At least you got some puts out of the gate. I like it. I can dig it. Now, I'm still watching AMC, guys. I'm still watching AMC for some another possible short position for that rejection off the 200-day moving average. My back is killing me today, guys. Like, really bad. I don't know what the hell's going on. We're looking for a reversal on the SPY off 450, 450. If we see a reversal form on the SPY around that level, we could really start to see the SPY get a little top heavy here. So right now, Zispizai, still grinding on up. We have yet to confirm any kind of reversal yet, so we are not looking for calls or puts yet on the SPY. I think it's just still a little too early in my opinion. I still think it's a little too early. We're really dropping off on volume as the stock's moving to the upside. I'm still not convinced. I'm still not convinced. Cole said your back hurts because you're carrying the trading community on TikTok. I love it, Cole. At least he's straight up with it. Your back hurts because you're carrying everybody for free on TikTok. Now my back hurts because I slept on the couch last night. I fell asleep on the couch and that was that. Someone said something about keto messes with your back. Like when you do keto, it messes with your back. I don't know. I've been doing keto lately and my body just hates me right now. My body just hates me right now. So, I mean, out of the gate, guys, we're only 20 minutes in. We already got some great profits. I saw some profits in profits chat. We got some profits here over on YouTube. We got some profits on YouTube. We got some profits before. You know what? Maybe today's a free stream day. Keto is good, but someone said it messes with your back. I'm like, what? So I don't know. My back's been sore ever since I started keto. So let's watch PHUN team. High alert, PHUN. If we see this break the downtrend as well as the open at 370, watch for a big run on PHUN. This breaks the downtrend and the open at 370. We could see PHUN back up at like $4.40. Not going to happen right like that, but it's a good target there on PHUN. Really? Yeah, I've done keto before and I don't recall having back issues. I need my BCAAs for sure. AMC does look really weak right now, guys. AMC is looking a little bit weak, but I probably won't get involved until it's like under the VWAP and under 30. I probably won't get involved with AMC until, you know, we're losing VWAP. We're still flagging on AMC. I mean, this is a textbook bull flag, guys. It's a textbook bull flag. So right now, this is a long. Right now, this is a long on AMC. Right? This is a textbook continuation pattern. This is a bull flag. There's your flag pull. There's your flag, the consolidation, looking for a volume pop, looking for a break of the downtrend out of this consolidation. You at least have room back to 31.23. Anything over 31.23 on AMC, you're looking at a $33 target next. You'd be looking at a $33 target on AMC next. I'm sorry, 32 first. AMC's breaking out of its flag. I'm long. Small position for the flag. Looking to see if we get a pop back up to the high of day out of this bull flag. Looking to see if we can get back up to like 31.23. Big buyer at 30.70, like 60,000 shares at 30.71. That's our floor of support. Below 30.70 is my stop. Below 30.70 is my stop. You have 60,000 shares looking to be bought at 30.70. If we take him out at 30.70, I'm out. He's at 50K. He's at 40,000 shares now. 40,000 shares at 30.71. We take him out, I'm out. He's down to 30. Okay, I'm out. It's going to crack. I got out right at break even. Wow. Okay. So BFRI, yeah, BFRI is ripping. That was a long halt. That was a 15-minute halt. BFRI has a lot of resistance here at 604, but breaking over 604, guys, and you have room next to 660. You can see $6.60 there on BFRI. So from 6, you have room to 660. However, support right now is all the way back down at the halt level. at $5. So support's at 5 buckaroos right now, okay? Support's at $5. AMC still in this bull flag, guys. AMC still in this bull flag. %. The more screens you have, the better you are. Absolutely, I'm in a sorority. Yep. Sure am. Making money for the baby shower? No, I'm making money for my my boyfriend. So BFRI, again, I'm looking for a break and hold over 6. We could run this up to 660. But right now, you know, support's all the way back down at 5. So I'd really be patient with BFRI and just wait for the stock to possibly come back down to 5. If it's not going to come back down to 5, a break and hold over 6. Oh, so many, Skylar. So many. You want to come? You want to come help me troll them back? ABUS potential bull flag. Not really a great bull flag. Look at AMC and compare it to ABUS, right? Look at AMC and then look at ABUS. There's the difference between bull flags. ABUS, that's just really a pullback into that 506 level of support. AMC is a bull flag, all right? So right here we had the high day resistance. We broke. We're simply pulling back, looking for the next leg up. If you go look at AMC, this is a bull flag, right? That is a bull flag right there on AMC, all right? If we go look at ABUS, not really a bull flag, right? More of just a break over resistance and consolidating above potentially new support. I love it, Skylar. You always crack me up, dude. So right now, as long as ABUS stays over 5, you're good to 560. As long as ABUS is over 5, you're good to 560. You got 40 cents to the upside. You could go 20 cents of risk. I mean, the better entry was right there in the low 5s, but still, as long as it holds over 5, you could see ABUS up towards around 558 to 560. Just make sure you're building your plans, right? PHUN broke the downtrend and 370, but came right back down below. That's a sign of weakness. I'm not a fan. AMC, just beautiful textbook flag. So if you guys want a good example of what a bull flag is and you want to add it to a folder on your desktop, this is a bull flag, right? 80% of the time, these stocks will break to the upside and continue higher. So next time you're like, hey, is this a bull flag? Go back and reflect on this AMC chart. And this is a textbook bull flag formation, guys. All right. It's funny stuff today. Funny stuff. How's the SPY looking? The SPY? I still don't think we're in the clear, guys. I really don't. You're like, what? But the SPY's up from 450 to 455, man. It's up $5. I still don't think we're in the clear yet. I just don't. I'm still being patient with it. I still have no plans on entries right now, long or short on the SPY. So, still not convinced. Still not convinced. How's the VIX? The VIX is actually falling a little bit. AMC breaking out of the flag, not able to continue over the prior high. So now what we do is we run this trend line out to the right. So we see we had the initial flag. We broke for a nice, 30 to 40 cent move to the upside into our first target, being the flagpole high, right? That's where I teach you guys to always lock in some profits right at the flagpole high, just in case it doesn't break out and continue higher. But what we could see is this to continue to hold this uptrend and then form maybe an ascending triangle breakout formation, which is another long setup, another setup that we could see this break over this 31.20 and run up towards around $32 here on AMC. Now, if we crack this trend line, I will look to short this. Above the trend line, we are considered bullish. We have potential to break 31.20. We have room to 32. Above this trend line, we are considered bullish for a break over 31.20. We crack the uptrend, we are bearish, and we can look to short this back down towards around the low of day. So again, BFRI, room down the 5. So right now we're not touching that. Room down the 5. DWAC, not crazy about it yet. PHUN, yeah, definitely, longer term red to green move. I mean, it took 30 minutes for PHUN to get that red to green, and even on a 5-minute, it's not clean. So, definitely red to green, not clean, not an A+ red to green. I'd rate this like a C- red to green move. But what we were saying is just a simple break of the downtrend in 370. That's when we could start to see this up to 440. So now we still have some support down at 370, guys. I would wait until we see a mild pullback and really see buyers here to hold this above 370. Right now, that's what I would want to see, before getting involved with PHUN. Again, we're only about 30 minutes into the day, team. We're 30 minutes in. It's still early. It's still young in the day. We have plenty of opportunity and plenty of time left in the day to make it happen. All right? So right now, remember, discipline, discipline, discipline. You're not chasing stocks after they've moved 30, 40 cents to the upside. We're waiting for pullbacks. We're waiting for good opportunities. We're waiting for good setups. I'm still watching AMC, guys. I'm still really focused on AMC. So let's look at AMC from an option perspective real quick. Okay, for like a day trade, we really don't care about the strike. We'd go the closest till expiration. Would find like a 30 delta. So we could probably run with a $33 strike for tomorrow. Just the implied volatility is ridiculous. But I mean, it's a 27 on the delta. It's easy to manage that risk. For every dollar that AMC moves to the upside, you can make $30 on your $54 investment. That's a pretty decent return. That's well over 50%. So at least we know we have potential on AMC to see 50, 60, 70% return on our investment. So all we're looking for AMC right now, guys, right, is for AMC to hold this trend line. If AMC could continue to hold this trend line and consolidate in between this flat resistance at 31.20, and we can hold this uptrend, we could see a textbook ascending triangle breakout up towards around 32. That's well over $1 to the upside. That means we could see 50 to 60% return on our investment. So if you guys are new to chat and you're like, well, Josh, this is a new term to me. What's an ascending triangle breakout? Ascending triangle breakout is when you have a stock forming higher lows with flat resistance at high a day. So what we could see is something like this, and we could see a nice break up towards that $32 resistance. So above this orange trend line, we are considered bullish. We have potential to move to the upside. If we start to crack below this trend line, we are going to look bearish. We could look to short AMC to the downside. So as long as it's intact, as long as it's staying above the trend line, it's considered to be bullish. We still have some time to be patient, to wait for this to properly set up and to properly form. Okay, right now it's a little too early to be jumping on it, but it's definitely worth noting. Ascending triangle stops below the trend line. If we break 31.20, we have room to 32. I'd be looking to buy the $33 strike for tomorrow's expiration. If I risk 50 cents on the chart, right? If I risk 50 cents on the chart, that's my stop loss. Okay, that's half the delta. That means my risk is going to be about $14 per contract. So I know $14 per contract is my risk. If we break and we run, we have $1 to the upside. So I know that I can make $26 per contract to the upside. So right there, I know I can have a 2-to-1 setup. I know what my risk is. I know what my reward is. But again, it's way too early to be jumping in to AMC. It has yet to set up, guys. But if it sets up, that would be the strike you would want to go with. And that's how you would build your plan. You'd be looking for a little over $1 of reward to the upside to 32 bucks on AMC. And you would want to have a risk no more than 50 cents on the chart, which would be approximately $12 per contract would be your approximate loss on AMC if you did get stopped out. So BFRI right now. Again, BFRI, you have to be patient and wait for this to come down and level at $5. You have to come down and wait for this to settle down around $5 support there on BFRI. You want to see DWAC hold above 52.20 now. That's the open, 52.20 on DWAC. You do not want to see this level rebroken. You really want to see this hold above that 52.20 mark. Right now, traders aren't really having it. Is OMER done? Yes, OMER is done. CFVI. Right now, it's not looking good, but it still has potential, so maybe we should still keep this one on watch just for a little bit longer. Ooh, ABUS. Ouch. What a rug pull. What a rug pull. Way to go, Skylar. Skylar's over there locking in some good profits. I think we may have some good puts coming up on the SPY. I think we may have good puts coming up on the SPY. We're seeing this become very top heavy right at 455.50 resistance. I know we broke above it, but look at how we keep falling back below that level. We keep falling back below. We keep falling back below. Momentum, 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 momentum. Losing momentum. It's starting to look like an arch. It's starting to get top heavy. It's starting to look like that rainbow. One other thing we could see is a head and shoulders formation to get this cracking to the downside. If we crack this trend line and we put in lower lows off of the lower high, I am looking to short the SPY. I am looking to short the SPY. Stops would be over high a day, and I'd be running this back down towards around that 453, which is our 20-day moving average, which would be a good place to cover. Right around 453 on the SPY. About $2 to the downside. And the risk is about, it's actually not the best risk reward. It's almost a 1-to-1. But I like the reversal. I like how we're seeing momentum die on off. We're seeing buying momentum, now shifting to selling momentum. A little bit of this quick head and shoulders formation. It's a very tempting short, but it's not the best, like 2-to-1 setup. So I'm going to be a little bit more patient and see if we can get a better entry on the SPY. If I miss it, I miss it. But I'm thinking if we can see it pop back up towards around 456 and then curl over, that's what I think. But again, I think it could start getting pulled down here. But again, at that point in time, it's just not the best risk reward. The really nice thing about day trading, guys, is you do not need to know what's going to happen next to make money in the market. You do not have to predict the market to make money in the market. All you have to do is have a systematic approach, an edge that produces more wins than losses, and you continue to apply that edge, that systematic approach consistently in the market. You do not need to know what's going to happen next. You do not need to predict the future. As long as you have the odds in your favor, it's that systematic approach, you will make consistent profit in the market. You're like the casino. The casino's gambling with you, right? Yeah, the casino is gambling with you. You're gambling with them, they're gambling with you. Why does the casino always win? Because they put the odds in their favor. How do we make consistent profit in the market? Because we find ways to put the odds in our favor. One should never use a put to get to the low of day. One should wait until low of day is broken to the downside, then retest. Yeah, I mean, that's proper validation, Skylar. That's proper validation. If you see a crack a low a day, it could easily pop back up and rip. What you'd want to see instead of chasing it is wait for the break of the low a day, look for the retest, look for it to start to curl back over, and then take a put with very tight stops if it does break back above and it regains that level of support. I mean, yeah, the SPY is curling. I was waiting for that, but I wasn't confident in the risk to reward on the SPY. And I didn't feel confident with saying, hey, buy these puts now, because the risk to reward wasn't at least a 2-to-1. And it's all about discipline, guys. It's not just jumping into a setup. You have to identify that it's at least a good risk reward before getting in. I did not identify the risk to reward, so it just wasn't something that I was confident with, jumping in myself. See, I'm not crazy about, DWAC. I'm not crazy about PHUN right now. The only thing that we could, clearly see on PHUN is a possible downtrend break, right? So a downtrend break here on PHUN. Support right now, 375. We could see a little something like this, right? So you got PHUN. You had resistance, high a day. You had resistance right through this level. We break above. We're pulling back into this level of support. You could see this hold support, break the downtrend, and go on its next leg up. If you like this setup, your ideal entry would be as close to 376 as possible. You'd want to place stops somewhere around maybe like 365 right underneath support, and your target would be back up to $4. That would be your first target. And then your second target would be up at 444. So you'd want to see this find support with a bottom, right? Break this downtrend. That signals a possible entry right there. Stops are just right underneath that level of support. First target is the prior highs, right around 4. Second target is going to be $4.40 if you guys are watching PHUN. And that's kind of what makes trading predictable. It's called psychology. If you learn human behavior, you can utilize that aspect, human behavior, trading psychology, to kind of get in the minds of other traders to get an idea of what they're going to do before they do it, which is how you're able to put the odds in your favor as a trader. Yeah, so you're allowed to short stocks as long as you have a margin account. As long as you have a margin account, you're allowed to short stocks. But here's my recommendation. As a brand new trader, you should not be shorting stocks in the beginning. It's very risky. Okay, we had an example yesterday. If you go long on a stock, the lowest the stock can go is 0. The most amount of money you can lose is your investment if you're going long on the stock. Right? If you short a stock, there's no limit on how high a stock can go. Our example was on DWAC from October. Imagine going long on DWAC at $20. The most you can lose is $20 per share. Imagine going short on DWAC. You lost over $150 per share. That's insane. So just use DWAC as an example of how shorting is very, very risky and how you need to master the principles of trading first. Mastering your risk management, mastering building plans, mastering everything before you decide to short, because there is unlimited upside potential and you can go in debt to your broker. So again, always remember that shorting can be very, very risky if not executed properly. I would. I'll add you as a friend. HARGIEL, whatever, 887. Yeah, I'd love to have a live debate with you on TikTok. You want to do a duet? I would love to. Love to do a nice, healthy TikTok live debate, and we'll just have a discussion and we'll stream it. If you're down, add me as a friend. I'll add you as a friend, and we'll do it 100%. So right now, guys, we're about 45 minutes into the market. We only had AMC short, Airbus, or I keep saying Airbus, ABUS, that I had to get out quick because I wasn't really digging it. The SPY is still rolling on over. I don't know if anybody grabbed puts up there, but I wasn't able to grab anything. Again, I'm sifting through like the charts right now because I want to find opportunity for you guys. If you have any stocks you're looking at, please bring them to my attention. But I'm sifting through these stocks to try and identify some opportunity for you guys, to put an alert behind it, right? A good plan, a good alert for you guys to make some consistent cash. But right now, I'm just not seeing what I want to see in the market from a consistent perspective to say buy here, stop here, target here. Everything's like, if this happens, you could see this. And if this happens, this is what you want to do. But we're not seeing anything really unfold for me to say, yo, buy here at 380, stop loss at 360, target at 440. I just don't have the confidence to put my name behind an alert. I don't want you guys taking sloppy trades or sloppy setups. So right now, I don't see anything that I'm going to put an alert behind, because I'm not seeing that A-plus opportunity for you guys. And again, we're still early in the day as well. We're only about 45 minutes in, so we still have plenty of time. Would have been a good put call on DWAC. I mean, looking at it in hindsight, and hindsight's always 2020, I don't see where I would have got involved. I mean, it would have been, not an A+ setup, in my opinion. It would have been like a B setup, not A+. We want to find the A+, guys. We want to find the A+ setups, right? It's all about discipline, waiting for the A+ setup to present itself. And I can't tell you how many times we see the best setup at 11 o'clock. We see the best setup at 11:30, and it only takes one good trade to make your day, to maybe make your week. Check the spread, Mexoids. Check the spread. The spread could be very large because it just went live. So you could have your bids here and your asks here, and it's taking the median, and it's making it look like you're up. It's just because the spread is possibly so large. So check the spreads. Josh's voice is flat today. No, it's not. What you talking about? What you talking about, Catherine? It's not flat. It's all over the place. It's like up and down. I'm trying to learn options. Would it be good on Kirk? Let's go look at Kirk. K-I-R-K. No, I'm just fucking around now. I'm sorry. I'm sorry. My voice is flat. I'll try and pep it up a little bit. I'll pep up my step. Pep up my step. Look at Kirk daily. Looking like a move happened already. Yes, it did out of the gate, and it's falling. K-I-R-K. Done. K-I-R-K is done. Right, it's done. All right, so Jeff, I'm trying to learn options. Would it be a good put? Not right now, Jeff. Not right now. It's very risky because you would be shorting the stock right at a potential level of support, and it's not great support. It's not strong support, but it's where pre-market bottomed. Okay. It's where pre-market bottom. Let's say you even grab the put there. Let's say you grab the put. You got to still look at your chart and see where you have to cover, right? Look at your next level of support. It's going to be 1347. So, I mean, you could grab $1 to the downside, but where's your stop? Your stop would be over VWAP in this case. So your risk is $1. Your reward is $1, right? That's called a one-to-one setup. You do not want to trade options at one-to-ones. You always most definitely want to trade option setups that have at least a 2-to-1 or better, right? That's how you stay on the profitable side of options, because options move crazy, man. They move quick, right? So when you see your risk is $1 and your reward's $1, it doesn't make sense to take that trade, especially with options. Oh, okay. Catherine says flat means no good trades. I'm not excited. You're right. The tone of voice. Reading the tone of voice. I don't see anything that really stands out to me that I'm really excited about. And you could usually like Blake back in the day. Tone of voice. Tone of voice. You know when I'm not crazy about something. You know when I really like it. And right now, I'm not crazy about anything, guys. I'm not. It's all about the A+ setups. The best of the best opportunities. And right now, we're not seeing those A+ setups. We're not seeing the best of the best opportunities. Pep up my step. Yes, I use the VWAP. Yes. I do use the VWAP. Absolutely, Jeff. Absolutely. We always want to find, a setup where if we can make $2, is our risk $1? Or if we're risking $2, can we at least make $4, right? That's how we always stay profitable in the market. Because even if you're 50% of the time right, let's say for every 100 trades, you're green on 50 and you're red on 50. Okay, I'm going to put this in perspective. Out of every 100 trades, let's say you have a 50% win rate. That means you're green on 50 trades. It means you're red on 50 trades. If you're always looking to make $1 and you're always willing to risk $1, you're always going to break even with a 50-50 win rate. With a 50% win rate, you're always going to break even because your reward's $1 and your loss is $1. You're breaking even. You're probably losing money in commissions and fees, and you're maybe losing a little bit in slippage as well. So you're actually losing at a 50% win rate. You'll come to find out that you may have a 50% win rate even as an experienced trader. Some of the most experienced traders in the world have 50% win rates. Okay? So how do they stay profitable? 2 to 1. That means for every dollar of risk, they're looking to make 2. So that means on that same analogy, 100 trades, 50% win rate, 50 are green, 50 are red, right? If you're making $2 on average on your green trades and you're losing $1 on average on your red trades, do the math. Over the course of your trades, you're still making $1 on average, so you're still profitable even with a 50% win rate. That's why it's very, very important to make sure that your reward is always double your risk. Because even if you have a pretty average month at 50%, you're still going to be profitable in the stock market. FHTX. FHTX. What is going on there? It was on the halt scanner. Nothing. FMTX. Halt scanner. Nothing. BFRI. It's got to break and hold 6, baby. It's just got to break and stay above 6. We could run it to 660, maybe $7, but until it's breaking and holding 6, I think it's risky. To be completely honest with you, Catherine, I think the calls already took place. We opened right at support, and we immediately bounced about $2.50 to the upside. That's a pretty strong move. I'm sorry, $4.50 to the upside. Right, 4.5. That's a pretty strong move. Right now on AMD, with the uncertainty in the market, not really knowing where we're going, things are going to get worse. You know what I mean? I would be really hesitant to be taking calls for like a swing trade. Like I would be really hesitant right now to be swing trading anything, especially options. Especially options because you can't do anything post-market and pre-market. So kind of looking at what I'm seeing on the daily chart, it gapped down, it opened right at the 20 EMA, right at support, and it bounced. I think that could be the move for today. And I'm still thinking the market could roll over. And if the market rolls over, watch for AMD to roll over as well. So I would be cautious. I would be a little bit more patient. And looking at some intraday technicals as well, right? Are you looking for a swing trade, Catherine? Or are you looking for a day trade on AMD? OMER, possible reversal? Nah, I just don't see it. I just don't see it right now. I mean, it could bounce a little bit, but I don't really see it making a proper reversal. I don't. I mean, this thing's just nasty right now. Look at the daily chart below every single level of support. You know, it is in this downtrend. It could break back to the upside, but right now it's risky because it's still in a downtrend. Could it reverse? Yes. What do we have to wait for a reversal? That is going to be a higher low, followed by a higher high. Once we see a higher low, followed by a higher high, that signals a reversal. Now we can get prepared to take advantage of a trade for a reversal. But right now, it's still in a strong downtrend. The trend is your friend. While it's in a downtrend, we are not touching the stock, right? It's just very risky. The stock is getting beaten down from $9.66 all the way down to $7. We need to wait for it to actually reverse. Day trade AMD tomorrow? Yeah, you know, I think that's a good approach, is waiting to see what the markets do today. AMD, my bad. Looking to see what the overall market does today coming into tomorrow, it could definitely be a good opportunity. We could see the markets bouncing, right? It could just have been a little overreaction, and we could see the markets start popping back to the upside. That would be great opportunity for calls in stocks like AMD and Apple that have been getting beaten down, right? Even calls on the SPY. But we're still not in the clear yet. And while we're still in that uncertainty zone, while we're not in the clear, we have to be extremely disciplined and extremely patient on what we're getting involved with. While we're in that uncertainty zone, we have to really just be patient and wait for the right confirmation. There's been a few days over the past couple weeks, I'm like, I can't find an edge on the SPY. I'm not calling anything. The next day, okay, boom. I like this. I like that, right? Rocking it, crushing it on these calls. Right now, I'm back to that. I'm a little 50-50 today with where we're really heading. So right now, at this point in time, I'm really sitting on the sidelines and I'm just waiting to get a better, clear picture on where we're heading next. But we're still not in the clear, and we have to be very smart and very disciplined with how we take advantage of this market. I would not short OMER because OMER has already fallen so much. I don't expect it to get hit. I mean, I expect it maybe to come down towards around 680. It's already made its move to the downside. It's already fallen almost $1.50. If you were going to short it, the short's already taken place. Right now, if you short it, there's not a lot of opportunity to the downside anymore. You'll probably see OMER more or less just kind of sit sideways and stagnant today. You know, DWAC, I'm not crazy about it. Like I said this morning, I'm just not crazy about DWAC. I just don't think it's going to be one of those stocks that really steals the show. PHUN, I wasn't overly crazy about this one either. The penny stock market is a bit on the choppy side. You know, ABUS is fading and falling. CFVI hasn't done anything. AMC was a good short, and it was a good short at the crack of the trend line. Again, above the trend line bullish, right? Below the trend line bearish. BFRI is a choppy stock as well. I mean, look at just all these lower shadows and upper shadows. It's traders are still very uncertain on where they want to get this stock going. So I'm really having a hard time finding, that just killer opportunity, right? I mean, I've looked at maybe 20, 30 stocks in the last 5 minutes, and I'm having a tough time finding just that killer opportunity for you guys. And we say this a lot. Sometimes the best trade is no trade, right? Sometimes there's just not a trade for the day. We have to be willing to accept that and be willing to be patient and wait for tomorrow. Right now, at this point in time, I'm not seeing that opportunity. I'm not seeing any reason why you should be really jumping into anything at this point in time. Now, if you see something that looks appealing, please bring it to my attention if you see something that looks appealing. Right now, I'm not really seeing anything that looks appealing. Yeah, DWACW are the warrants. For DWAC. Boeing. I'm looking bearish right now, guys. Boeing is looking to be a little bit on the weaker side. This is an intraday descending triangle formation. An intraday descending triangle formation. A descending triangle is flat bottom support, building lower highs. And you see the stock bouncing in these levels, right? This is an 80-20 setup that 80% of the time you will see the stock crack and move to the downside. All right, 80% of the time you will see that stock crack and move to the downside. What are we starting to see on Boeing? Starting to see the low with these lower highs as well coming into support off these lower highs. That is a very bearish sign. We could easily start to see Boeing crack and move down towards around next, right around 190.120. 190.120. That's about $2 from here to the downside. Real little spaz, I want to hit on your statement. I like it, but I want to add to it if you don't mind. I'm changing my approach completely. I'm definitely just going to short from now on. No more buying long for me. I want to tweak that. I want you to change your approach and focus on shorting, yes, because there's a lot of opportunity with shorting, but I don't want you to completely disregard all the other strategies and your approaches that have worked for you in the past. What we have to be mindful of is this. I'm going to give you a little analogy because there's nothing in the market, okay? Strategy number 1, strategy number 2, and strategy number 3. So we're going to label these, again, strategy number 1, 2, and 3. This could be shorting, this could be going long, this could be whatever, right? We have 3 different approaches, right? Instead of just having one, we have 3 approaches that, work, all right? But what we have to understand are the market conditions. We have to understand market conditions. And we have to understand, are we profitable? Are we break even? Or are we red? So let's go ahead and do this. Let's grab this. We're red on the day, right? This is red, right? Green. And gray is going to be neutral, right? That's neutral. Let me remove my webcam real quick. Okay, so we have strategy number 1, approach number 1, number 2, and number 3, right? Green, break even, and red. But what we have to take a next step further, what we have to understand are market conditions. Are the markets great, right? Are the markets neutral? Are the markets conditions kind of struggling? What a lot of traders will do is they'll have a strategy that they'll be trading, right? They'll have this strategy, number 1, and it'll work for them a good amount of the time. But when the market goes neutral, right? They're neutral. When the market is bad, they're losing money, right? What they'll then do is say, you know what? Screw strategy number 1. Let me go to 2. In the same concept, right? Same concept. So let's back this up a little bit. Right? What we have to understand is it's not going from this strategy to this to this. Instead, it's understanding this strategy and applying it, understanding this strategy and applying it, and understanding this strategy and applying it. But being mindful of market conditions. Because now what we can do is strategy number 1 could be the best strategy in a neutral market to make profits. Strategy number 2 could be the strategy that works well in a great market to make profits. And strategy number 3 could be a great strategy that works in a bad market to make good profits. So that's what we need to understand is we have 3 different strategies. We have 3 different approaches. Instead of going from number 1 to number 2 to number 3, and then back to number 1, and then number 3, number 2, is understanding all 3, and then understanding what markets they work in the best to always produce consistent results, right? To always produce consistent results. Because the last thing that we want to do is apply strategy number 1 all the time in all markets and always get different results. Okay. And then you're like, screw strategy number 1. Let's go to strategy number 2. You apply this in all markets and you always get different results. Where's the consistency here? Where's the consistency there? Same thing with number 3, right? You can apply it in every market. But you're always going to get different results. And when you have this happening, when this is happening, right? What are you doing? You're like, fuck strategy number 3. I'm going back to number 1. And what are you doing? You're repeating that process, right? That process, you're repeating that over and over and over, and you're always just going back to a different strategy and a different approach, and you're always seeing these mixed results. So now, instead of just switching between these strategies, understanding these strategies, understanding these approaches, and most importantly, understanding the markets that works best in. Number 1 could be best in a neutral market. Number 2 could be best in a bad market. And number 3 could be best in a great market. And understanding how these connect and what markets they work best in, you could always drive this to profit and always see more consistent results versus having that mixture and that cycle of inconsistency. We can become consistent. I hope that makes sense. All right. So I tried to give you a great example and break it down, but this is something that needs to be worked on as well. Right? Instead of cycling through approaches and strategies, is having our book, right? Having our, what am I trying to say? Brain fart. Having our playbook. Having our playbook, right? These plays, right? These plays right here, our playbook, these plays work good against the Colts. Now, these plays don't work good against the Colts, but they work good against the Bears. Now, these plays don't work good against the Colts or the Bears, but they work good against the Patriots. These plays, right? So we have all of these plays in our playbook, but each different types of plays work best with different teams, right? Our strategies, our playbook, some of these plays will work best in different types of market conditions. And that's what we have to understand. And that's what we have to practice and work on, is understanding which plays in our playbook work best in the different markets to always produce consistent winning results. I should have recorded that. That was solid. Just to kind of put that in a different perspective. So you're seeing a 9 EMA VWAP cross on the SPY. It's not on a 5-minute time frame, but it's on the 1 minute. That's a little bearish. I like seeing those setups on 5-minute time frames, but we are starting to see it here on the 1, and we could see the SPY continue to get pulled down, and we're getting ready to see a 5-minute cross as well. This is very bearish. I'm still thinking we have some room to the downside today. For now, at this point in time, if we start to see that cross and that rejection, we're going for puts. Not yet, though. The market conditions, yes. Market conditions dictate the strategy that you apply. It's really easy to hone in on one edge and one strategy that works for 3 years. And then when markets really shift abruptly, it's a challenge to identify a different edge that works. And you saw that over the last month or so for me as I was adapting, right? I didn't have 3 plays in my playbook, right? I had 3 plays that worked in the market we were in. Now the market conditions are shifting abruptly, and now I happen to fine-tune my playbook and find new edges and new plays that work good in these types of market conditions. And that's shorting high a day, and that's going long after a rug pull. It's shorting the high a day, looking for a rug pull. Waiting for a rug pull, waiting for a base, then jumping in for the rally, right? Those are some new plays in my playbook, and I know when to apply these plays based on the types of market conditions that we're seeing for the day. So we may have some really solid puts coming up on the SPY team. Very solid puts coming up on the SPY. Make sure you're watching the SPY. And if we have these puts, I'll be sure to alert this for you guys. I still think we have maybe 10 to 15 minutes before we get the proper confirmation for these puts. AMC got schmacked. I mean, I took profits really quick, but I'm cool with it. But overall, that did exactly what we thought. But again, I'm quick to take profits. Yeah, the SPY's getting pulled down hard after that high, man. Now that I look back at it in hindsight, hindsight's always 2020. F the risk to reward. I should have just taken it. I should have just taken it. Screw risk to reward. No, I'm kidding. At that point in time, it wasn't great risk reward, and it was a trade that I just didn't feel confident with getting in. I found it to be a little risky, but we have a good setup, guys. We have a great setup. Check this on the 5. Right? Check this out on the 5-minute. We have a strong decline. The 9 EMA is crossing the VWAP. We could see a 2-legged pullback. So you're going to see maybe 2 to 3 5-minute candles bounce, stay below the 9 EMA, stay below the VWAP, and then see sellers come in for the next leg to the downside, right? We talked about the 2 to 3-legged pullback a couple weeks ago in a lesson. It's when we get that strong sell-off, 2 to 3 green candles back to the upside, while that 9 EMA is crossing the VWAP to the downside, and we see price continue to stay below those 2 levels simultaneously at the same time. This is a great potential upcoming short. Right, so again, we have to wait for the slight bounce, 2 to 3 candles back up, reject off the 9 EMA, reject off the VWAP, see that little bit of a curl, and then we could look to get in for that nice next leg down for a continuation move to the downside. How's the VIX? The VIX is the VIX is starting to rally back up here a little bit. There's more fear in the market still, guys. The higher the VIX is, that's when the markets sell off. So as long as the VIX is still moving up, guys, you're going to see the markets decline. Remember, when the VIX pops, you're seeing corrections. You're seeing selling in the market when the VIX pops. It's the fear index, right? When the VIX is moving low, right? When the VIX is, above 15, below 20, the market's typically in a nice, healthy uptrend. When you see the VIX really holding above that 2025 and it's still pushing to the upside, you continue to see the stock market get pulled down. So be mindful of the VIX. The VIX right now is still moving to the upside, and that still shows some fear and uncertainty in the market. Right now, I'm only trading on the 5-minute because I think the 5 minutes going to give us a little bit more validation and some clarity on a lot of these trades. But right now, again, I'm still not seeing anything that I'm going to say buy now, buy now. The only thing, maybe BFRI. It's actually above 6, right? It's never been above 6. It's actually above 6 and it's holding 6. But look at all those wicks and shadows. Do you guys like all those wicks and shadows? It's pretty messy. It's pretty choppy. So, I mean, if it was cleaner, right? If it was a cleaner stock, cleaner movement, I'd be all over this. But it's very indecisive. We have a lot of upper shadows, a lot of lower shadows. It's a very indecisive stock. But the only thing I could say right now, $6 support. Trendline support, VWAP support. If you're eager to trade, right? If you're just eager, your stops right now are at 566. Stops are at 566, 660, and then a $7 target on BFRI. So 665 stops. I'm sorry, 565. 565 stops. 660 target, $7 target. Again, you can tell by the tone of my voice. I'm not crazy about it. Not crazy about it, but If anybody's out there like getting ready to pull the trigger, might as well at least tell you where a stop should be and where you should lock in profit. I'm not taking the trade. But again, everybody has their own strategy, their own edge, their own approach. This could be you. But to make sure you know your levels, where to get in, where stop losses need to go, where targets are at, support, the reasons for support, the reasons for targets, all that good stuff. The SPY just had a strong bounce. This is why we don't chase stocks. Look at this. This is why we're not chasing. Look at that very strong recovery on the SPY. It is very slow right now, guys. It is very, very slow in penny stock land. We have yet to see anything on the SPY. CTK. Nothing with CFDI. And BFRI is the only thing that was over 6. But like I said, I'm just not crazy about it because we're not seeing that consistency in the market. And it had a lot of upper shadows and lower shadows. Yeah, look at that. It's curling over now. So, guys, do you have any questions right now? Questions, stocks you're looking at. Questions or stocks you're looking at in chat, TikTok. And I notice when traders see their trend line crack, they get nervous and scared, which makes them want to sell. When I see the trend line crack, you're shorting. Exactly. When traders are long and there's a trend line, traders will place stops underneath the trend line. So BFRI, why did it get a little iffy right there at that trend line? Why did it have a lot of volume move in? You had a lot of stops getting triggered on the BFRI. A lot of stops getting triggered there. Now we're on the bearish side of the trend line, and that could be a go-to short. Explain the mentality to stop trading after hitting your daily goal. So if I have a $1,000 daily goal, right? I'm at $1,000 my daily goal. And if I hit $1,000, I'm done. If I have a $1,000 daily goal, and let's say I'm up $1,300 on a trade, right? I'm like, okay, I'm actually above my goal. Nice. Like yesterday. My goal usually is 500 to 1,000. At 1,000, I'm done. But yesterday I was at $1,200 right out of the gate. So what I did is I said, I will not risk more than $200, right? I will not drop below 1,000. So if I find another A+ opportunity, I'll still trade it, but I will not put myself in a position to lose more than $200, so I do not fall back below a K. What happened? I took a trade. I lost $200. I made $994 on the day. I closed my broker down right then and there. But if that trade would have been profitable, maybe I was at $1,500. I'm like, all right, cool. If I see another A+ setup, maybe I risk another $200, $300, but I will not go back below my daily goal. But if I still see A+ opportunities, I will still take them. Who knows? Maybe I hit 2K or 3K on the day. But I'll never put myself in a position to drop back below my daily goal. But if I'm right at my daily goal, let's say like $950, $1,000, I'm done. I'm done. Apple. That's my wife. It's like, I like the Hooters calendar up there. It's not a calendar. It's my wife was in the Hooters calendar. So, I mean, it is the Hooters calendar. She was in it. My wife. I'm a fan of my wife. I give her props. She made it into the Hooters calendar. That's a big deal. That's a big deal. I was not able to get the Matrix NFT. No, it screwed me. I'm out money and I never got my NFT. So I was not able to get the Matrix NFT. Apple, comment on Apple. Really kind of flat on the day. It's just really sideways. It's moved from around, 159 to 161. It's in like a little $2 range, but again, the overall market's going to dictate what we see here. The SPY's falling again. Watch for Apple to fall. Right? The SPY is starting to curl on over. Watch for Apple to curl on over as well. Jeff, it depends on market conditions again. To answer your question, yeah, you could do that. But are those the current market conditions? Are you seeing pops and then all day fades to where you can short the pop and then hold it all day for a nice red close? If that's the market conditions you're seeing consistently, yes, that's an approach that works. But that approach wouldn't work if we're seeing stocks rip and run and close up 100%, right? You would short a pop and you would just get squeezed out of your short all day. So yes, that is an approach if the market conditions are allowing that approach to work. Right now, we're teaching you guys how to be patient. Right now is a very patient day, right? We have to be extremely patient with what we're doing in the current market. The only thing that I see getting involved with is the SPY. We had that bounce. We had the rejection on the 5-minute, right? So we had that little bit of a bounce. We're seeing it get rejected off the 9 EMA and the VWAP. It could still curl on over and come down to that 450. I'm going to look to see how this 5-minute candle looks over the next probably 2-3 minutes. But if we were to grab puts, you'd be looking for a 450 put for tomorrow. You're going to pay about, oh, wow, look at that. Those are expensive. Those are actually kind of pricey. Wow, even the 448s for the SPY, they're not expensive. They're $200 a piece, but they're kind of pricey, right? Normally they're like $100, $120, being at the money. They're like $300, so they're actually pretty expensive right now on the SPY. So you'd be looking for probably a 448 put, but we don't have any confirmation yet. I would say a 448 or a 450, one of the two, a 448 or a 450 put if we get the confirmation. You have potential for $4 to the downside. That means you'll make 4 times the delta. The delta is $30 per contract. That means you'll make $120 per contract if you make the full $4 move to the downside. That's, 80%, 70% return on that 448 if you catch it for a full $4 move to the downside. But we have yet to get confirmation on any puts right now at this point in time. Experience, Mexoids, experience. I know what the delta is and what it represents. I'm looking at a 448 option contract and it has a 25 delta, right? I know that represents for every dollar the stock goes up or down. If I'm looking to get $4 of movement to the downside, I take the delta and I multiply it by 4. That's $100. So that means I would invest $150 right now. If it falls $4 to the downside, I would make $100 on the options contract. And I can do the same exact thing for risk. Let's say I'm going to risk $2 to the upside. That means I'm going to lose $50 per contract if I get stopped out, if the SPY goes up $2. So I'm looking at the risk to reward based on the chart. I'm getting those dollar amounts, and then I'm doing some simple math based on the delta to see what my loss could be and what my reward could be for every contract that I have on that particular strike. It could be a delay. Your thinkorswim could be delayed, right? So if you do it on the desktop and you're zeroed out, but it's still showing active on the phone, maybe try log out on the phone and log back in to see that refresh and to take effect. So I wouldn't say you're doing anything wrong. I would say that it's just not catching up. On active trader, the transaction went through, but on the phone, it's still active. Most likely because it's just not refreshing and updating on the phone. So again, we never had confirmation for puts. Why am I not grabbing puts? Why am I not shorting the stock? Why am I still zeroed out on my positions? Right? Why am I still sitting right at $400 for the last hour and 10 minutes? I don't see anything. I'm not even trading. Right? I'm not even trading. As someone that wants to hit a K today, I don't see anything right now. There's no sense in me trading anything because I'd just be trading the trade. It's the trade, the great opportunities, that have great opportunity, right? That have great odds of working out in your favor. That's how you make consistent profits. Right now, just putting on a trade is just to trade. There is nothing right now to trade. That's why I've been zeroed out for the past hour now. I don't see any opportunity, guys. I don't see anything worth getting involved with at this point in time. Now, that could change in 1 minute. That's why we're actively looking for these stocks that we've had on watch. Just see if anything stands out to us. See if anything looks appealing. And again, team, there's not a lot that's really like A+ setup that I'm going to put my name behind. So again, right now, I honestly think the SPY is the watch, right? I think this is where we should just place our focus until we see a penny stock hitting that high of the day momentum scanner, right? Look at all these high of days, 20, 27, 23, 2. So when you look at our high of the day momentum scanner, okay? When you look at our high of the day momentum scanner, when we have these boxes, this count alert in black, there's a lot of momentum to the upside of the market. So look at this. Scroll through this high of the day momentum scanner. I'm scrolling. We have no blacks, right? You got some dark greens. MRAI has 45 new highs of the day, but we don't have anything in black. When we have nothing in black, or we have one in black, that's LE. LE's in black. That was at 10 o'clock this morning. That was an hour ago. We have not had anything consistently hitting high counts of new highs a day. That means there's not a lot of momentum in the market to the upside, right? So look at the high of the day momentum scanner. That right there dictates there's not a lot of momentum in the market. There's not a lot of momentum to the upside. Look at our breakout scanner. The last time we had anything hit a breakout scanner was 30 minutes ago. ESSC was the last stock that broke out, that had a breakout. So when you don't see stocks getting halted, there's not a lot of black count alerts on the high of the day momentum scanner. When there's no stocks consistently popping up on the breakout scanner, it's a very dry day in the market. Very dry day, right? So right now, we're watching the SPY. That's where the opportunity is going to be on the SPY right now, waiting for a proper setup to make some money on options. Cole, are you here? Mr. Cole. If you're here, Cole, Mr. Cole. Let's dive into a lesson. If Cole's here, maybe we talk about this new crypto or this new NFT project that we invested in. What do you guys think? Right? Do you guys want to do a lesson today on trade plans? Or do you guys want to have me bring Cole on the mic if he's available to talk about crypto, new projects, as well as the new NFT project that we just invested in last night? What do you guys want? right? Nexoids, a lesson on trade plans. I'll do that. Absolutely. I'll show you how we set up the VWAP in settings. Absolutely, Skylar. Let's do a quick little vote. We want to bring Cole on, if I can get a hold of him. And we want to talk about, the crypto market, review that with some TA, talk about the crypto project we got invested in last night and show it to you guys. Or we can do lesson on trade plan. All right, there we go. Everybody wants to do trade plans. Damn it. Damn it. You guys are putting me to work today. I got a headache. Hungry? No, I'm kidding. I'm kidding. I am kidding. Has anybody made money from this guy today on TikTok? Who's making money today? Before we dive into a lesson on trade plans, who's making money and how much money? I'm going to shut TikTok down as well, guys. I'm going to shut it down. But before we do that, who's making money? I don't know. Not a lot. That was mine for the other day. So good job, guys. Good job. I'm proud of you. I like it. Merlin. Not trading today, not seeing what I like. Same. I'm sitting on my hands right now. I'm not seeing what I like. I was just showing you profits in profits chat. Those are profits from today that I was showing you on TikTok. So yeah, there are people that made money today. I made money today. We had a lot of people in chat make money. A lot of people are sitting on the sidelines, which is what I recommend. Because right now, there's just not a lot of great action in the market. So today's more of just kind of sitting back on the sidelines, being patient, understanding that sometimes the best trade is no trade, right? And today's one of those days that today the best trade really is no trade. It's all about patience. It's all about discipline. So we're getting ready to dive into a lesson. I'm going to go use the restroom real quick, guys. And we're going to go ahead and dive into a lesson on trade plans. Real quick, Nexoids, what are some rules that I should set for my trading? So I'm going to start with this, Nexoids. No, Skylar, just asking. Just asking. It was a genuine question. I've had, over the last 3 hours, hundreds of troll messages, right? The only one that I even gave my time to was the one saying they wanted to debate. And I'm like, yeah, I would love to have a healthy debate and talk about trading and maybe change your perspective. That was a healthy conversation in my opinion. Other than that, I've disregarded all of them. This was a genuine question that I answered. So when I asked you guys 2 months ago, when we had that conversation, I haven't paid any attention to that stuff. So, but Mexoids, what are some rules that I should set for my trading? So I'll start here, Mexoids. Number one, I'll start with this, is set rules for anything and everything that you think will make you a better person and a better trader. So let's say that you, as a trader, you suck at trading the first 30 minutes of the day. You're just not good at it. Set yourself that rule. No trading the first 30 minutes of the day. Let's say that you always lose in pre-market. Set a rule. Never trade in pre-market. Let's say you have a tendency to overtrade 10 times a day, and you don't want to do that. You're racking up commissions and fees, and you're just overtrading. Set a rule: no more than 5 trades per day. So anything that you think will make you a better trader, create a rule around it. But there are what we call the golden rules. We all have the same rules. One of the rules that every trader has, it's the golden rule, is never risk more than 3% of your account on any given trade. That means if you have a $10,000 account and you put on a trade, your maximum loss on that trade should not exceed $300. I'm not saying you have to max out at $300, but you can't exceed $300. Maybe your max loss is 100, maybe it's 200, maybe it's 250, but it cannot go above $300 because that's the golden rule of 3%. So that is the golden rule that everybody has, have to have it. But rules are tailored to us, how we trade, our personalities, where we're at in our trading career. We all have different rules. One of my rules that I have that no one else has, I do not trade 30 minutes prior to me knowing I have to leave my house. When I was trading and I'm still working part-time, I would wake up, I'd trade, and I would go work that evening, part-time. So what I would do is I had a tendency of putting on trades 10 minutes before I had to leave my house just to put on a trade just to make money. Let's say I didn't trade all day and I'm like, man, I only got 10 minutes left. I only got 10 minutes left. I want to make money today. I want to make money today. Okay, this is a good setup. And I'd put on a trade, right? It could have been a good trade, but I have to close it in 10 minutes because I have to leave. Or I'm like, fuck it, I'll do it on my phone. So I'm driving down the road and I'm trading on my phone, right? I realized that was not a situation I wanted to be in. So I set a rule for myself of no trading 30 minutes prior to me knowing I have to leave the house, just to give myself that window and that buffer to exit all of my positions. If I was still in a position, I would still have that 30-minute window to be able to get out of that position before I had to leave. So again, rules are really built for you to make you a better, more consistent trader, but we all have the same rule of the 3%, right? The rule of 3, the 3% rule. Never risk more than 3% of your account on any given trade. I love it. Look at Skylar. Look at Skylar. He's got an Excel spreadsheet. He's logging all of his trades, his stop losses, the dates, the order type, look at that. That is what I did, but I did that on paper. I did that on paper. Right? I love that. And he's got a lot of cool things in there too. Protect and preserve. Get in, get up, get out. Base hits win games. Get on base. Do not average down. Stop loss equals protection. He's setting his stop loss amounts set in stone. Take profits proudly. There's nothing wrong with taking profits. Don't chase stocks. Be patient. It pays to be patient. I love it. Hope is harmful. Cut losses early. Don't fall in love. Try not to time the market. The trend is your friend. No trade is a good trade. That's what I'm talking about. I love that. That is absolutely amazing, my man. That is awesome stuff right there. Good stuff, Skylar. That is sick. I love that a lot. Good stuff, buddy. That's what everybody should be doing. That's what everybody should be doing. Logging their trades, keeping notes, putting the rules down, something that's in front of you all the time. That's what everybody should be doing. And I don't do that every day. I'm not going to lie. I did it religiously the first 5 years of my trading. 6 years. I just got inconsistent with it this year. So I haven't been logging my trades consistently this year. Yeah, so let's take a quick break. And let's take a quick break. And we'll be back in about 5-10 minutes and we'll dive into our afternoon lesson on trade plans. All right, guys, we're back and we're ready to dive. Yeah, I forgot my mic was off. So I looked down, I was like, oh, my mic's still off. So let's make sure we didn't have any final questions. Make sure I didn't miss anything in chat. Skylar, is it from? All right, cool. I didn't miss anything. Angel saying CTK real quick. CTK. CTK. It popped up. Delta Airlines is what popped up. CTK. New business strategy focus on metaverse and NFT creation, digital content, interactive game productions related to the metaverse. Kutex, new business strategy to focus on metaverse and NFT. So they had that at 3 a.m. They dropped it again at 6, and they just dropped it again at 11. So look at the press releases. The same press release has been used 3 times in one day. That means they really want to see their stock move. They're just duplicating and reissuing it. You're right at a psychological level of resistance. So psychology, right? Traders see that $1 mark as resistance. What do people do at resistance? They sell. So what can you expect to happen when the stock comes near $1? You can expect people to sell, which would cause the stock's price to come down. So what I would say is, if it's strong enough to get through those sellers and buyers are strong enough to push through those people that are probably going to sell, you could see buyers overpower the sellers. You would see sellers take a step back, realizing that, hey, the stock could move higher. You have buyers in control, and you could see the stock up towards around 109, which would be that 50-day moving average, right around 108, 109 on CTK. But right now, just be mindful that $1 is just that psychological level that traders sell. So we would not want to buy at $1 because we know people sell at that price. We would want to wait until the price is over, right? Until the stock is over that price before we think about making entries on it. All right, so let's dive in to an afternoon lesson. And today's lesson, ladies and gentlemen, is on trade plans. And the thing is, I repeat, I do not have a trade plan lesson typed. I don't. I effed up. I effed up big time, guys. So what we're going to do is we're going to whim this. We're going to just freestyle it. We're going to freestyle it. All right? This is a very simple lesson. And we're going to freestyle this. So what I'm going to do is I'm going to shut down my webcam. All right, so you guys can see the whole thing. And we're going to talk about, and I'm going to pull this back up before we get into it. So everything that I say, I want you guys writing down. This is very, very important stuff. Very, very important stuff. I want you writing all this down. So I want you getting a piece of paper and a pen, pulling up your notepad on your computer, and getting ready to type. All right, and you're going to title this trade plan. So let's do this together step by step, right? Let's go ahead and grab this and let's title this trade plans. All right. Trade plans. Okay. And I have a unique way of teaching trade plans. You don't hear this from anybody else because I created this. Okay. So when we think of trade plans, what do you guys honestly think of? This is going to be an interactive lesson, right? If it takes a little bit longer, that's fine. I want to get you guys involved and engaged. So when you hear the word trade plan, what are you really thinking of? Like, what's running through your mind? What do you think the definition of trade plan is? Like, what runs through your mind? What do you think about? What you look for pre-market, during market hours, and then closing hours. See, this is good. I want you guys to be honest and say, this is what I think of when I think of trade plan. I think that you are trying to predict what would happen when the market opens. How I'm going to plan my trade. Entry position, exit position. How much risk to take. That's exactly right. 100%. So again, the term trade plan, a lot of traders have different meanings behind this. But what a trade plan is how you're going to plan your trade. Okay? You're going to plan your trade. You're going to plan where you want to get entered at, what price you want to buy at, right? You're going to plan at what price you want to sell at. You're going to plan on what price you would walk away from the trade at a loss. You're going to plan how many shares you're taking of a trade, okay? So what to look for pre-market, during market hours, and closing hours, that would be more technical analysis, right? That would be technical analysis, marking up all of your levels, support, resistance, trend lines, having that data so you can... Sorry, my wife's calling me, guys. If she calls again, I may have to mute it. My father-in-law is in the hospital right now. He's like internally bleeding. So if she calls again, that means it's serious, and I will have to stop this and take this call because she's freaking out right now. So if she calls again, I will have to jump off here. Yeah, normally she calls because she thinks I'm done at 11:30. Like I said, if it's an emergency, she'll call again. You're 100% right. Family is first. So if I don't get another call or a text, it means she was just calling to say, what's up? Literally, she calls sometimes like, yo, hey, what's up? I'm like, hey, I'm in the middle of a lesson. Oh, sorry. I'm like, it's the same thing every day, babe. But that we have something going on. So, but yeah, I haven't gotten another call. So okay, so, you know, what we're doing in the morning, right? Looking for, you know, pre-market, during market hours, after hours, right? That technical analysis, the support, the resistance, the trends, the news, everything like that. That's not building a trade plan. That's just getting your charts ready and established to be able to build a plan around it. Okay, so a trade plan is planning your trade. Kind of like taking a trip. Right? When I was 16 years old, I took my first out-of-state trip over spring break to Florida. Okay? I've never driven to Florida before. Back in the day, we didn't have GPS or smartphones like today, right? You guys think I'm young? That was like 12 years ago. We didn't have the type of technology that we had. And that type of technology was pricey. I didn't have GPS on my phone. I didn't have a Garmin, right? We still used maps on vacations. So if I would have just jumped in my car and just drove to Florida, it probably would have taken me doubly the amount of time to get to Florida because I didn't know where I was going. I didn't know what exits to take, what cities to pass through. Who knows? Maybe I ended up over in Texas, right? If I would have just blindly gotten my car when I was 16 and tried to drive to Florida, I probably would have never made it in that 16 hours that it normally takes. Like I said, I probably could have went to Texas or the Carolinas because I didn't know exactly what cities I needed to pass through in order to get to my destination, right? So I planned my trip. I got out a map. This is where I am. This interstate, right, to Kentucky. From Kentucky to Nashville. From Nashville to Atlanta. From Atlanta to Valdosta. From Valdosta to Tampa. From Tampa to Clearwater. So I knew exactly what cities I needed to head towards and what exits I needed to take to get from where I started to my destination, okay? I planned my trip, right? If you just blindly get into a trade, you don't know where you need to go. You just like that analogy of hopping in a car and going across country without a plan of, you know, planning your trip, you do not know exactly how to get there to your destination. So that's why we plan our trades. We know exactly what needs to take place and what we need to do to reach that destination. And that destination is consistent profits. Okay, I hope that analogy made sense because I'm really bad at analogies sometimes. So a trade plan is a way of planning our trades just like you would plan a trip ahead of time before packing up the car, before getting in the car, and before actually driving towards your destination. So we need to plan our trades, okay? I put together something months ago, and I think this is very helpful and very easy for brand new traders, right? Because there's a lot of variables when it comes to building a trade plan, right? You have the formation, okay? Where do stop losses go based on the formation, right? What's my position sizing? Where do I get out? How do I skip? There's a lot of variables when it comes to trade plans. It's not just I buy the dollar and I sell it too, right? What's your position sizing? What's your risk, right? What's the formation? What's the path? There's a lot more that goes into it. So I created something called the 3 A's. All right? The 3 A's stand for analyze, okay? Assess, and accept. Okay? So I came up with the 3 A's, and the 3 A's stand for analyze, assess, and accept. Analyze the chart. Assess your trade, and accept your loss. Okay? And you go through this step by step in order, right? So number one, the first thing you do when building a trade plan, the first thing you do is you analyze the chart, right? You're analyzing the chart. So let's go ahead and just draw up a little chart. Now I'm going to remove my webcam. All right, let's just go ahead and make a chart. Okay, so the stock opens, it pulls back, right? It's looking weak. And let's say this is what you're seeing right now at this point in time, okay? This is the chart. This is what you see. You have one line drawn up, and this is the chart, right? And you're considering a trade on this stock. You need to plan your trade. We come and think about the 3 A's, right? The 3 A's, analyze, assess, accept. So first, we need to analyze the chart completely. Okay, we need to analyze the chart. What are we analyzing? The trend, right? The trend is your friend. Why do we need to analyze the trend? Because if we're looking to go long, but the stock is in a downtrend, it's probably not a good idea, right? If we're looking to go short, but the stock's in a strong uptrend, it's probably a bad idea, right? The stock's in an uptrend, in a strong uptrend, we may want to consider more long opportunities. The trend is your friend, so we're analyzing the trend. The trend is higher, right? The stock opened and it broke over the open, and since then it has been grinding up consistently in a nice uptrend, right? The volume looks really, really good. Every time the stock breaks a level of resistance, right? Every time this stock breaks a level of resistance, it has high buying volume. So I see that the stock is breaking the ceiling. The stock is breaking resistance. And when the stock breaks resistance, right, we have strong buying volume. And it moves up very nicely, right? It moves up very nicely. We are simply analyzing the chart. That's all we're doing at this point in time. Right? So as you're analyzing a chart, you are in the process of building a trade plan. Regardless if you know that or not, as you're drawing downtrends, uptrends, support resistance, identifying patterns, right? You are analyzing the chart. You are doing step number one. You're analyzing, all right? So let's say, based on this hypothetical example, you're analyzing the chart and you see a bull flag. Right? You see a bullish flag, right? You're still analyzing because we know that a bull flag has a certain place that we get long. There's a certain place we place stop losses, right? There's a lot to it. It's not just bull flag buy, there's more to it. We know exactly what we need to see for this to be a good bull flag. So again, let's say this is what we see. And you're analyzing the chart. Wow, I see a bull flag. Okay, I'm seeing a bull flag. What criteria needs to take place for this to be an A+ bull flag? Well, I know I need to see the pull, right? I need the pull. What's the pull? It's the big explosive move to the upside. Right here, that would be considered your pull, okay? Right on. I see that big explosive move to the upside. I see my pull, okay? While the stock makes that explosive move to the upside, what's some criteria that needs to be met, right? Well, the pull, the explosive move to the upside, needs to occur on more buying volume, increased buying volume. So you would come down and look at the volume. Is the volume increasing as the stock is making that big move to the upside? Is volume going up? Do you see more buyers moving into the stock, showing more demand? Yes. All right, cool. Criteria number 1, we have our pull. Criteria number 2, volume is matching with the price, right? This is criteria. All right, what's next? What's something else that we need to see, right? What's something else we need to see on a bull flag? We need to see a period of consolidation, right? We need to see that flag, right? We need to see that flag visually where we're making lower highs and higher lows, where the stock is getting very, very tight into what appears to be a pennant, right? A pennant. Let me go ahead and can I remove this? I don't know if I'm going to be able to remove this one. Okay. So we need to see this sideways formation, this period of consolidation, which we see here. We see this period of consolidation. Now, what do we know when we see this period of consolidation? What do we need to see take place? We need to see less volume. We need to see sellers slowly becoming depleted. So we would want to see the selling volume decreasing during that period of consolidation. We want to see the selling volume going down, right? That's criteria number 3. We'd want to see the selling volume going down. Okay, right now you're analyzing the chart. That's all you're doing. You're analyzing. All right, cool. We got the big leg up on increased volume. Fantastic. Criteria number 1 has been met. All right, we have this period of consolidation. It's consolidating. It's going sideways. It's building higher lows and lower highs. It's getting very, very tight. All right, we have that period of consolidation number 2. Check. Now, is this consolidation occurring on less and less and less and less volume? Criteria number 3. Do we see decreased volume? Yes. Number 3. Fantastic. So we have just identified a bull flag, right? We've just identified a bull flag. We just analyzed the chart and see that we have an A+ bull flag because all of the criteria is being met on this bull flag. So we have just done step number 1. We've analyzed the chart. We've analyzed and identified a very nice bull flag formation, and we could rate this an A+ setup. This is an A+ setup. Why is it an A+ setup? Because all of the criteria has been met to a T. Strong move to the upside, increased volume, number 1. Here to consolidation, number 2. Decreased volume during that period of consolidation, number 3. The criteria has been met. We've analyzed. We see a bull flag. Now we move on to A number 2. The second A is assess. This is where we start assessing everything. We assess our entry. So we can go ahead and say that I'm going to be a buyer when this stock breaks out of this period of consolidation. When this stock breaks out of this consolidation, right, on increased buying volume, I'm going to make an entry. So right here, this is going to be my entry. Right there. So when this stock, if this stock breaks out of this consolidation to the upside and we see strong volume, buying volume, moving back in, this is where I'm going to place my entry. This is where I'm going to go long. All right. Next, what do you guys think you have to do? You need to go and identify where your stop loss is going to be. Right? So you know where you want to get long if you see this take place. Right? Where do your stop losses go on bull flags? Stop losses on bull flags go underneath the consolidation low. So right here, we know at this point in time, before you're even in the trade, before the trade has even taken place, we know where the stop loss needs to go. Stop loss needs to go underneath that consolidation low. Stop loss needs to go right underneath that consolidation low. All right? Where's our target? Right? Well, I teach you guys to always have a target at the flag high. So right up there is a good first target. So this right here is going to be your first target. So you know exactly where you should look to sell some of your position, if not all of your position. So you know your entry, you've assessed, right? You've assessed what your entry is. You've assessed at what price, at what level you're going to stop out of the trade. You've assessed where your target's at on this trade, right? You've even assessed where your next target is, right? Maybe it's way up here, right? You've assessed where your second target is for this trade, right? So you could scale out. Maybe you leave a runner on the table. Maybe you've taken it a next step further and you've assessed what your third target is going to be because you really like this trade, right? You want to be prepared, right? You want to have a great plan. You want to assess all your levels ahead of time just so you know exactly what the outcome is going to be and you know exactly when you need to click that sell button and where to put your levels. So you're assessing everything, your entry, your stop loss, your target, second targets, third targets if you have them, right? Now, what do you think the next step is, right? You know where you want to buy. You know where you're going to walk away from the trade and take a loss. You know where you're going to take profit. You know where if the stock continues to run to the upside, where you're going to take profit again. And you know where if the stock continues to rip, where you're going to finally take profit. What's the next step? What do you think the next step is? Someone that's new in chat, someone that knows the answer, please do not answer. You know the answer, don't answer. Someone that's new to chat, what's your next step in this process? Are you ready to take the trade? Are you ready to take the trade? Like you've done a lot of work, right? You think like, man, I've done a lot. I've analyzed the chart. I did a lot, right? I assessed everything. Like I've done a lot. Like this trade plan's complete. I'm ready. Are you guys ready to take this trade yet? Yes or no? Jay Cohen absolutely crushed it. You need to assess your position sizing. You need to assess, right, how many shares you can get. So before you assess how many shares you can get, you first have to understand what the stop is. So let's go here and say, okay, from my entry to my stop loss, that is negative 30 cents per share, right? You have to assess that dollar amount. And for this example, right, this is a 2-to-1 setup, right? For this example, it's a 2-to-1 setup. You're going to make 60 cents a share, right? If you get up to your second target, that's going to be $1 per share based on this example. Third target, let's say it's $1.30 per share, okay? You've assessed your entry, stop, target, second target, third target. You've identified it is a 2-to-1 setup, right? You're looking to make 60 cents. You're going to risk 30 cents, so it meets their criteria. It's a 2-to-1 setup. Before you jump in, you have to understand what you're getting yourself involved with. What is your dollar amount loss going to be? So for this example, let's say you have a $10,000 account. okay? $10,000 account. And you know that your risk cannot exceed 3% of your account. So negative 3% is your max risk. You have a $10,000 account, and the golden rule is 3%. So you cannot exceed 3% max risk on this trade. So what is your dollar amount stop loss? Your dollar amount stop loss is 10% or $10,000 times 3%. So you grab a calculator if you need to. 10,000, it's $300. 10,000 times 0.03, right? 3%, $300. Right? So boom. So that means my max dollar amount loss cannot exceed $300. Right? I'm assessing what my max loss can be. I have a $10,000 account, 3% max risk. That means my max dollar amount loss cannot be more than $300. All right? So if I'm going to risk 30 cents per share on this trade, how many shares can I get? So if my risk per share is 30 cents on this trade, how many shares can I get to not exceed a $300 loss? $1,000 big ones. Correct, because 1,000 shares, 1,000 shares times 30 cents, right, is negative $300. Right? So if you were to jump in with 2,000 shares, you're not building a proper trade plan based on your account. That 2,000 shares at a 30-cent loss, you're losing $600, which is 6% of your account, which completely null and voids your trade plan. It's a bad plan. It's not a good plan. It's not a proper professional trade plan. You're not doing what you're supposed to do, right? So you do the math. You think about it. 1,000 shares at a 30-cent loss is negative $300. And negative $300 is 3% of my $10,000 account. So I'm in line. It's the golden rule. I'm in line with how I'm supposed to be building this plan. All right? So you know that you can take 1,000 shares and your risk is going to be $300. Okay? You've just analyzed the chart. You've just assessed the trade. You've assessed your entry. You've assessed your stop loss. You've assessed your first, second, third target. You know that you cannot lose more than $300 on this trade, and you've now assessed how many shares of this trade you can buy. That is 1,000 shares, and that will not exceed a $300 loss. Right? You've done everything. You have assessed. The third and final part of a trade plan is the third A. Okay? It's the third A, and that's accept. Why do you need to accept your loss before entering the trade? What benefits do you think? What do you think is beneficial about accepting the loss before you get into the trade? Like, why do you need to accept that you could lose $300? There's a couple reasons. No emotions. Exactly. Get your mind right. Yeah, get your mind right. You're not emotional. So if you enter this trade and you get stopped out and you've accepted the loss, you take it for what it is. You move on. But if you've done all of this and you haven't accepted a $300 loss ahead of time and you get stopped out, you could be emotional. Oh, I'm so mad. Oh, I just lost $300. I'm going to go revenge trade. Ugh. So the benefit of accepting your loss ahead of time is, like you guys said, get your mind right and be able to trade this with zero emotions and zero hesitation, right? You're going to enter the stock when you said you were going to enter. You're going to take profit when you said you're going to take profit. You're going to cut the trade when you say you're going to stop out, right? You're okay, right? You are okay. 1 second, guys. I'm sorry. Right? You are okay with a $300 loss. So that's going to allow you to trade without fear. You're going to be fearless. You're going to be able to trade without emotion. You're going to be emotionless. And you're going to be able to trade without hesitation. That means you're going to get the entry you want, and it's going to prevent you from FOMOing into the trade or chasing the stock after it's already made its move. Right? There's a lot of benefits for accepting a loss. What's another benefit? Let's say you're like, $300. That's a lot. Man, do I really want to risk $300? Do I really want to risk $300 today on this trade? It gives you an opportunity, guys. It gives you an opportunity to do one of two things. Number one, go back to analyzing. So if you're like, you analyzed, check. You've assessed, check. And you cannot accept. You're having a hard time accepting that loss. It allows you to do this. Boop. It allows you to go back to analyze, reanalyze. What does that allow you to do? Maybe you realize, man, this is a shitty setup. This setup sucks. Why would I even take this trade? I feel like I'm just trading the trade, right? I feel that I'm just gonna lose $300. Like this stock looks like duty, right? This chart is not good. I'm not gonna give away $300 because this is not a good setup. So guess what? You can do this. No trade, right? Sit on your hands. Be patient. Okay? So it allows you to do that. Or what does it allow you to do? Let's say you can't accept your loss and you go back to analyze, but you say, you know what? The chart's still intact. It's a good setup. It's a great setup. It allows you to go back here. Reassess, right? Reassess all your levels. Look at the volume. Look at all the criteria. Assess everything. Maybe you're like, you know what? It's a good setup, right? In the beginning, right? In the beginning, when I was analyzing, in the beginning, I thought it was an A+ setup, right? In the very beginning, I identified this as an A+ setup. But the more I look at it, you know, the more I look at this stock, right? The more I look at it, I can't give it that A+ rating. I can't give it an A+ rating. I'm going to have to give this a B-, right? I got to give this a B-, right? So what does that allow you to do? Right? It allows you to reduce your position. On A+ setups, I go full size. On B setups, I reduce. On C setups, I reduce. Right? On D setups, I don't trade them. On bad setups, of course, I'm not trading them. You can grade the setup A, B, and C. You can give it a grade. And based on the grade that it receives, based on your assessment, based on your analyzing, you're allowed to grade it. And based on the grade, will determine how much you're going to lose. So, for example, if it's an A+ setup, I will risk 3%. If it's a B setup, I will risk 2% of my account. If it's a C setup, I will risk 1% of my account. Right? You thought this was an A+ setup. Now, when you go back and look at the chart and reanalyze it, you realize it's not an A, but it's better than a C. It's a B setup. So, 2%. All right. What's 2% of my account? 2% of my account is what? It's not $300, right? I'm not risking 3% because it's not an A+ setup. I'm going to risk 2%. So minus 2%. I can no longer risk $300. My risk is $200. So that means I can no longer buy 1,000 shares of this stock. What do I need to do? I need to reduce my position size. So, all right, let's do some math. Right? 800 shares times 0.30. That's 240. Can't do it. 700 shares times 0.30. That's 210. 650 shares times 0.30, 195. Boom. So that means I can probably grab roughly 650 shares, and that'll put me at a negative $200 loss. I am now risking 2% versus 3%, right? So you went from 3% risk, you can't accept your loss. You reanalyze, right, and realize it's still a good setup, but I have to give it a B- rating, right? That then allows you to go back and reassess your position sizing to you'll put yourself in the right position to only risk 2% or only take 250 shares. And again, you do the next thing. Go back to accept the loss. Can you accept $200 now? right? Is it still a good setup? Can you accept a $200 loss? If the answer is no, you go back to reanalyzing. Maybe you give it a C, right? You go back to your assessment. You reduce your position sizing, and you go back to accepting your loss. You repeat that cycle until you can say, yes, I accept my loss. If you go through that cycle, right, and you still cannot get to the point of accepting your loss, you do this. You will not take the trade. If you cannot accept that loss, you do not take the trade. If you go through that cycle 3 times, right, you could go through that process 3 times before you get to a dollar amount that you say, I'm okay with that loss. You know what? I'm okay. Okay? It was an A+ setup. It's a C setup. I'm not going to risk 3%. I'm going to risk 1%. I can't get 1,000 shares. I'm going to get 600 shares. That's a $200 loss on this trade. Am I okay with losing $200 on this trade? If the answer is yes, guess what? What do you do next? If the answer is yes, you've analyzed the chart, check. You've assessed everything, check. You've accepted your loss finally after 10 minutes. I'm not saying it'll take 10 minutes, but you finally accepted your loss. You're like, woohoo! Man, I built a plan and I can accept that loss. All right. What's the next step? What's the next step? You tap buy. Mexoids. You wait for your entry price to be hit and you enter the trade. Why are you going to hesitate? The only reason you hesitate is you're not prepared. The only reason you hesitate and not get into a trade is you're not prepared. You lack preparation. But you just took all this time to get prepared. So why are you going to hesitate? All right, you're going to be able to enter the trade without hesitation. You're going to be able to take this trade fearlessly. You're going to be in this trade and you're not going to be fearful of what's going to happen next because you don't really need to know what's going to happen next to make money. We know that. You don't need to know what's going to happen next, right? You're going to be fearless. You're going to be emotionless, right? If it comes down and stops you out, who gives a shit? You were already okay with losing $200. You've accepted the loss. Before you even clicked buy, you've already accepted in the back of your mind that you were down $200. You've already accepted that. So what's there to be emotional about? What's there to be frustrated about? And when you start hitting targets, why are you going to be greedy and bag hold just a little bit longer when you've already said, I sell here, I sell here, I sell here? And where do these targets come from? The chart. The charts don't lie. So now you're not going to be greedy and hold the bag and take a winning trade to a losing trade because you know exactly where you're going to sell. You know exactly where you're going to sell. You're going to be able to trade without fear, without hesitation. Trade your plan. Now, I'm going to throw this out there. As an experienced trader, I don't always trade my plan, but I always plan my trade. I will always plan my trade, but I will not always trade my plan. I can read the time in sales. That is something that's very hard to master. I still don't have it mastered, but I'm good at it. Skylar pointed that out earlier. Tape reading, level 2, price action, volume price analysis, spreads, right? I take all of that into consideration to determine, am I going to stay in this trade? Or am I going to take my profits now? I'm really, really good at identifying when I should get out of a trade, even if I don't hit targets. I could literally be in this trade, and I don't like it right here. I cut it before it does that, right? Because I can read the price action and time sales. As a new trader, I would be in, and I'd hold and hold and hold and hold, and I would get stopped out, okay? Now, there's a lot of times that I see it now as an experienced trader, this, and I'm like, I'm going to get out, and then it goes like that. And I leave a lot of money on the table. I have a good bad habit. I have a good bad habit of leaving money on the table, right? It's a good habit because when I read it correctly 80% of the time, I'm able to lock in profit before it comes down. When I don't read it correctly, 20% of the time, I leave money on the table. But did you hear this, the math, the statistic, 80-20, right? 80% of the time, I read this right, and I lock in profit before it's a stop. 20% of the time, I read it wrong, and I leave money on the table. The odds are in my favor to continue reading the price action, to continue to be a chameleon and adapt to every candle, every minute, every second. And if I don't like something, I'm taking my profit. 80% of the time, when I don't like something and I take my profit or I cut the trade dumps, works against me, it would have been a stop loss. 20% of the time, right, I read it wrong and it blows to the upside. But 80% of the time, I'm better taking money off the table than holding just a little bit longer. So me doing that outweighs the fact that the stock blows up. That's how I'm able to take consistent profits, right? That's how I'm able to make consistent profits in the market. AMC was a prime example today. I had a trade plan. I want to short at the 200-day moving average. My stop's up here. My target's down here. I jumped in, right? I took profit soon because I didn't like what I saw, right? I wanted to go ahead and lock up my $400, right? If I would have held it all day, it would have been profitable. But I would have taken a lot of heat during that time, and it would have taken forever to play out. My edge is reading the time and sales. My edge is understanding the level 2. My edge is volume. My edge is price action. That's my edge. My edge is locking in profits quick, consistently. I'm really good at nailing entries and being right 80% of the time. When I nail an entry, I'm in the green, I lock it up, and 80% of the time, I win. Now, sometimes I have losses, like we all do, but 80% of the time, right, I take profits very, very quick, but I'm usually right by taking profits quick. So what I'm trying to say is, as a new trader, you need to get in the habit, the good habit. This is what we talk about, the foundation. The foundation. It's good to have a strong foundation of building trade plans, right? Planning your trade and trading your plan. But as you grow, as you learn price action, when you know how to read the time and sales, when you know how to read volume properly, right? Looking at the candles, how the candles move, that intuition. It's the instinct, right? It's that gut feeling that you get the more you're in the market. You may take profit soon. You may scale in a little bit more. You may bring your stop loss to break even. You may add over your first target, right? You may do a lot of these things that were not initially in your plan, but you're an experienced trader and you're able to do that on the spot. In the moment, you can make a smart, educated decision right then and there and still keep your plan intact and not exceed your loss. As a new trader, it's hard to do that. I can add to my position. I know what my average cost basis is, and I know where my stop loss needs to go right when I'm clicking that buy button. As a new trader, I could not do that. I couldn't do it. I'd have to sit back and do the math. Okay, if I buy another 500 shares, where's my cost basis? Okay, it's here, right? Where do I need to bring my stop up to not exceed, right? It's a process. I wasn't able to do that on the fly, on the spot. But someone that's been doing this for almost 8 years, in the moment, something may present itself. I'm like, fuck, I'm getting out. Or fuck, I want to get in. I want to average in. I want to buy more, right? I want to buy more. And I know how much more I'm buying. I know where my stop loss needs to go to not exceed my loss. I can do this on the spot efficiently with discipline, all right? But as a new trader, you may not be able to do that, right? You may not be able to do that. So you need to learn the foundation, the fundamentals first and get consistent with it. Then you can start tweaking things on the fly as you build more confidence and more consistency with your trading. I like Skylar's analogy. It's like a veteran quarterback calling an audible or going off the fly. I'm following you. A rookie can't try that. He has to run the play only. This is the play, you run the play, right? This is the play, you run the play, regardless of the outcome, right? You may get a touchdown, you may get first down, you may get sacked. You run the play. Tom Brady, he can call an audible, going off the fly. Something happens in the moment, he sees it, he's experienced, he reacts to it, and he completely does a different type of play, right? Because he's experienced. He's been in the game for a while. He's able to adjust in the moment, on the spot, right? He can adapt very, very quickly and make quick, quality decisions, right? Quality decisions. Not a bad decision, but good, smart, educated decisions to keep the odds in his favor of that being a good play, correct? So, that is a great analogy, and that's exactly what I was trying to get across, but his analogy, Skylar, thank you. I mean, you're the analogy king. I'm going to hire you to be the person that puts together my analogies, okay? So, yes, that's why me, and you will see this, I'm not here to teach you my edge, right? Because my edge is advanced. My edge is like looking at the leaves on a tree without understanding what the leaves hang on. The branch, the trunk, the roots, right? Without the roots, you don't have the trunk of a tree. Without the trunk of a tree, you don't have the branches. Without the branches, you don't have the leaves. So why are you focused on the little detail instead of focusing on what's really supporting those leaves? What's really holding those leaves up? That's your foundation. This is your foundation, right? Every single month, every single year, you will advance and you will grow and you will start moving up that ladder, up that tier, into these fine details, into the price action, right? Into adjusting on the fly and adapting in the moment with a good quality decision, like Skylar's example with a quarterback throwing an audible out there, adjusting the play in the moment because he sees something that he thinks, okay, this is not a good play. I need to do this on the spot. Let's go, right? So that is how you build trade plans, guys. That is how you build trade plans, right? It's the 3 A's. No one else is going to teach you the 3 A's. I came up with it. I trademarked the fuck out of it. The 3 A's. You analyze, you assess, you accept. You analyze the chart, you assess your entry, you assess your stop loss, all of your targets, right? What your loss is based on that percentage of your account and how many shares that equates to. And then all you have to do is accept the loss. And once you can accept the loss, you'll be able to take the trade without fear, be able to take the trade without hesitation, you'll be emotionless, you'll be fearless, and you will see more consistent results in your trading. And the reason for this process as well is by doing this 100% of the time without fail, you are going to talk yourself out of so many trades. You start applying what we just talked about today on all of your trades consistently with discipline December, guess what? Guess what? You're going to talk yourself out of more than half of your trades. I guarantee it. You're going to see a trade. You're going to be like, fuck, I want to trade this. Hold on. Okay. I have to do the 3 A's. I can't just jump in, right? I got to do the 3 A's. Analyze, assess, accept. And you're going to be like, yeah, I'm glad I did the 3 A's. Fuck this trade. This trade sucks. And you're going to see it go, you're like, ha, good thing I applied the 3 A's. Good thing I built a trade plan. Good thing I took a step back, right? And I remained disciplined, and I did what I was supposed to do and what I said I was going to do. Because if I wouldn't have done that, I would have jumped in this trade and it would have been a loser, right? I got my emotions in check. I got my mind right. I built my trade plan. It was a really bad stock. It was a really bad setup. I gave it a D rating. I didn't take the trade, and I'm glad I didn't take the trade because it would have worked against me and I would have taken a big loss. Okay? So that's the lesson on trade plans, guys. It's not hard, right? I tried to find a way to make this very, very simple for me as a new trader. I thought, like, what would have been easy for me as a new trader to be more consistent and easier to build plans? And I thought about this for like months, and I came up with the 3 A's. Analyze, assess, and accept. And if you just analyze, assess, and accept and apply the 3 A's on every single trade that you're considering taking, you will make more consistent profits in the stock market. But you have to be willing to do this with discipline on every trade. And if you cannot do it, you will find yourself losing more money than you're making. And that's not why you're here. You're here to make more money from the stock market consistently. Exoids is over there drawing as well. I like it. Look at him. He's taking those notes. He's taking the notes. I love it, Mexoids. Way to go. So do we have any questions? Do we have any questions about, my way of teaching you guys how to build plans, how to build trade plans? Everybody's got their own way of doing it. This is my way of doing it. And this is a way of doing it that I think would have really helped me as a brand new trader. And so I really hope that it helps you as a new trader as well, to just get in this mindset, to understand this, and to apply this. So questions, please let me know, guys. I'm more than happy to answer any questions that you guys have. 3% of your account balance. So if you lose $2,000 of the 10,000, it's now 3% of 8 grand. Yes, of your account balance. You should never risk more than 3% of your account on any given trade. That means on a $10,000 account, your per trade stop, your per trade loss cannot exceed $300. Just draw it, Skylar. You have good intuition. I can tell, Skylar, you have great intuition. You have that gut. You could read the volume, I feel like. You can read price action. Sometimes your trend lines won't connect for shit on a bull flag. But it's a bull flag. It's meeting the criteria. It just is a really shitty, choppy bull flag where your trend lines just really don't connect, right? You would give it maybe a C+ rating. Right? It's still a bull flag. It's meeting the criteria, but these trend lines aren't perfect. So I'm going to give it a C rating. I'm going to take less size because it is a little bit on the choppier side. Right? But when it's textbook like AMC, right? Like this morning, that was a textbook 1 minute bull flag. I mean, that was textbook. 100% all day. You can draw the uptrend. We were drawing the downtrend, and it squeezed, and it broke, and it got to our first target. It came down, it would have stopped you out on the rest. All right, would have stopped you out on the rest. But that was a clean, pretty consistent bull flag. I would have given that maybe like an A-. I would have given that maybe like an A- rating there on AMC. Maybe like an A-, right? Mexoids, I can revamp a lesson. Today was a Win It lesson. All of our lessons for the month of December are heavily structured to go with the theme of discipline. So what I would suggest, Mexoids, is so we do not have to strip one of these lessons out for December, is dive into the video lessons library, type in level, right? Level. It's going to pull up all of the lessons that we have on the level 2. Oh, yeah. If you catch a minute, VWAP. Yeah, so Skylar, go into your studies, right? Go to edit studies. Go find your VWAP, right? You got your VWAP added here. And click the little settings icon, the little cog icon next to VWAP. It's going to pull up your VWAP customization, okay? What you're going to do is this upper band and lower band underneath your plots, right? Underneath your plots. Don't adjust the VWAP, but the upper band, remove all these checkboxes. And the lower band, remove all these checkboxes, right? So upper band, remove, lower band, remove the checkboxes. Hit OK, hit apply, and now you're going to have your single VWAP line without the upper band and without the lower band. Steven is asking, how do you pick a risk amount? Like 30 cents, 60 cents, $1, $2. How do you pick the risk amount? Every single setup has a different placement based on the chart. Every single setup has a different placement. One bull flag could have a 10-cent stop. Another bull flag you see on a different stock could have a $2 stop loss, right? So you look at the chart and you say, this is where my stop loss has to go based on the chart. Here's my entry. What's that dollar amount? It's always going to fluctuate. It's never going to be consistent. It's always going to vary, and it's always going to be different depending on the stock, the price of the stock, the pattern that you're looking at on the stock. There's a lot of those variables, right? It always is based on the chart that you're looking at where your stop loss must go. It's never a set dollar amount. It's never a set percentage. It's always based on the chart. And every single setup has a different what? Has a different stop loss placement, has a different target, has different entries. They have different criteria. Everything changes. Bull flag is not the same as a head and shoulders. Right? Bull flag's not the same as an ascending triangle as far as where you place your stops and the criteria that needs to be met. Everything's different. That's why you have to learn these things and understand where stops go, where you place them, where your entries are at, based on the formation that you see, based on the strategy that you have in front of you, and then you build your plan around it. Absolutely, Skylar. Absolutely. So, we are coming into 12:30 in the markets. 3 trades for me. ABUS down $8. DWAC, I believe that was a pre-market trade that just didn't get the pop. $32. AMC, 1 for 2. A green one, a red one. $359.90. Up 380, 360 on the day. Not a great day. It's a green day. Right? It's a green day. I haven't seen any really killer setups that I wanted to get involved with. I would rather walk away with my 380 than walk away with 0. Because even 380, 360 a day, do the math, it adds up. It's like $7,000 a month, right? It's like $84,000 a year. It still adds up. Doesn't seem like a lot in the moment, but it adds up. All right. So if we have any final questions, please let me know before we end our commentary session, guys. We've been rocking it Monday, Tuesday, and Wednesday this week. Typically, it's just Monday and Wednesday on commentary. So today, I am going to get my stuff together. I have a lot of stuff that I have not been able to do over my my afternoons, but we've been having fun in the market. I wanted to make sure that we were here, we were having fun, and you guys were learning and getting all this value bombs and all these this education, guys. So today, most likely will not have any afternoon commentary, but I will be in the office. I will be getting some work done. So if we see any opportunity present itself, you best believe I'll be jumping on the mic. But right now, where the focus is nowhere. It's like, where the focus at? Where's the traders at? Right now, everything penny stock wise is pretty flat, pretty sideways. And right now, the VIX is dropping. The Qs are ripping a little bit. SPY's popping up a little bit as well. So overall, we're actually looking pretty decent on the SPY. So right now, I just see a lot of momentum dying off on the SPY. I mean, we just see a lot of momentum fading, but I can't tell you how many times we've seen that, oh, momentum's fading on the SPY. It looks like it's going to roll over, and it doesn't roll on over. When did this really start? I'm looking to see if we have any news. South Africa reports an additional 11,000 cases, an increase of almost 400%. We're halfway through the day. We're halfway through the day. And we're seeing the SPY move up pretty decently, but it doesn't mean we're in the clear yet. Doesn't mean we're in the clear. I can't tell you how many times we look like we're good and we close red on the day, so, and leave a big nasty upper shadow. So let's just kind of look at the charts real quick. Let's take this to a 4-hour and just look at some key levels. right? We've broken over one of these pretty solid key levels of 456.80. That was a pretty decent level on the 4-hour chart. We are above. Your next level that we need to start breaking above here on the SPY to really see potential that, hey, we're in the clear is 458.46, which we just tested. And then over that level, we may start feeling more confident as far as being in the clear. You'd have room to 461.04. 461.04 if we look at the 4-hour chart here. Let's take this. Let's go back to the day. Let's take this into our 4-hour chart. We have any valid downtrend here? We do still have a pretty valid downtrend here on the SPY. So, you know, we're having a nice little double bottom bounce. We're clearing that 458.80. We're hitting resistance at 458.46. And then we do have resistance up towards around 461.04. And we see this nice downtrend as well. So for me to take longer term calls, like if I were to swing trade some calls a month out for new all-time highs by the end of the year, I'd want to see this closing above 461, as well as this downtrend. If that ever takes place, we could look for some 475 calls going to the first of the year here on the SPY. But if we see it getting rejected at one of these two levels and we start to see some weakness move into the market again, we will be looking for some puts back down into the 450s. Right now, it's having a decent little bounce right off that double bottom. And again, right now, your next target is that 458.40, which we just hit. Over that, you're looking at 461. So, I mean, that's still $2.50 to the upside. All right, guys. So, whew, man, I've been going hard since 8, 9, 10, 11, 12. Oh, yeah, I got to get some food. That's why. I've been on a liquid protein diet lately. I feel like liquid protein diet, and eat nothing but eggs. I'll tell you what, I like eggs, but it's getting old. So I'm like, man, can I eat a burger yet? Can I eat pizza? I want something for my tummy. So I'll probably just go eat a shitload of eggs over lunch. But guys, enjoy your lunch. Enjoy your afternoon. Like I said, I'll be here working with the developer. Oh, I said I was going to showcase the new platform. I don't know if anybody even cares about the platform. Bitcoin, we're still waiting for that intersection. All right, so Bitcoin, we're still waiting to come down into this point. All right, I'm still thinking Bitcoin at like 52 to 53. I'm a buyer. Did he make any changes? We want to finish the platform today, I guess. So he just said, we're going to finish this today. I'm like, we better finish this today because I'm ready to bring you guys over. Who's ready to come over to this new database, this new platform, and get off this one? I'm ready. I'm so ready. So ready. And it's not even close to being done yet. He wants to be done for testing today. He wants to be done for testing today. But we still have all of our page creation that we have to do. But at least we can bring you guys over little by little or all at once, and we can still create these pages as we're on the new platform. Still don't have the interactive tickers. Just some CSS. The streams work. The test stream works. That works. That. Settings is all that. Change the username. So you can change your username now, guys. But the one thing that I want you guys to prevent doing is changing it consistently. Right? Like, the last thing I want you doing is changing your username, like, every day. I'm not going to know who the heck you are. Skylar's going to be like, oh, this is Skylar. I'm like, I don't know. I've known your username forever. But if you come in and you're like, man, this is not the username I want to change it. But we may limit it to one username change indefinitely. So if you come in, you're like, man, this is not the username I want. We probably put a restriction on that to where you can only change your username maybe once every 6 months or something like that, just so we don't have people, just going crazy with it. So that's all working. That's not in the right section. Confirming another case of the variant. So we're getting there little by little. We should be hopefully over for testing very, very soon, guys. We should be over for testing very, very soon. So we shall see when the time comes. They'll just have a few things it looks like that we need to work on. We're getting there. I'm hoping by 13th, we can bring you on officially. So the 13th, we'll have everything running in chat now. I'll be dropping a link. You guys can come on over, log in with the same username and email, and we'll test the platform this week. Just in case we experience any issues, we can fix it the next week, retest it into December, and then it'll be officially rolled out for January 1st. That'll give us a chance to migrate on over. And if we ever have any issues, at least we still have our current platform that we can work on. Right? All right, guys. So I'm out of here. It's been a long day. It's been a fun day. I hope you guys enjoyed the lesson. I hope you guys enjoyed our trading session as well. We absolutely just crushed it. Once again, congratulations. Great job, everybody. If you are watching the SPY and you're like, where is it going next? Where do I get involved? We already talked about to the upside long potential that we have. But if you see the SPY crack this trend line, remember, it's trading psychology, right? Traders put their stops below trend lines. So if the SPY cracks the trend line, you could see a lot of stop losses being hit and a lot of shorts entering this position as well. And you can see the SPY start to sell on off and pull back if we crack this slide up trend. So keep the SPY on watch. If you're interested, you have a couple key levels over 458.50. You can run this up to 461. It's about $2.50 to the upside of profit. If we crack this uptrend and we crack below 456.80, we could see this all the way back down into the 454s. Another $2.50 opportunity to the downside. All right? Enjoy the rest of your day. Enjoy your lunch. And you never know, you may see me back in here this afternoon if we see some opportunity in the market. Once again, good job, team, and good job, traders. Let's go ahead and end it the way we always do. In 3, in 2, in 1. Woo! Way to crush it. Way to get it, baby. I'm super proud of you guys. Keep locking in those consistent profits. Trade safe and trade smart. And keep this discipline going for the month of December and for 2022 as well, baby. Enjoy your lunch. And I may see you back here this afternoon, traders. Have a good one. I'll see you guys later.